All right, all right. Who do we got? All right, so it looks like we're live. So for today's live, I know this is a little impromptu live. I wasn't planning on doing this, but I did get some interesting comments. So I just wanted to talk about a couple topics on today's live. So we're going to be diving into the U.S. economy. We're going to be talking about the housing market, and we're going to be talking about the state of the credit space right now. And then at the end of the live, I'm going to be giving you guys some exclusive credit gems. All right. So anyone who's on the live, just write down in the chat if you could actually hear me. I just want to make sure you guys could actually hear me. So if anyone's on the stream right now, just give a thumbs up or thumbs down if you're able to hear the audio. Okay. All right, so looks like we got about, okay, clear, perfect. All right, so let's jump right into it. So the first thing I wanted to talk about, so I posted a video the other day and I wanted to just ask you guys in terms of the current state of the economy, right? Because depending on who you might ask, you might get a different response. Now, the question that I want to ask, and I put this in the community section before, is the U.S. in a financial recession right now? I'm just curious to, know what you guys think about that, because there's different perspectives, right? I work a lot on the ground, right? Talking to consumers, talking to business owners. I also, talk to maybe, let's say, very successful people who, to them, it may not feel like a recession, right? But before we dive into that, let's talk about what the actual definition of a recession is, right? So I wanted to share this really quickly. Now, this is from the National Bureau of Economic Research. And so this is a leading institution. Basically, the way they define, I'm just going to read this verbatim, right? So the National Bureau of Economic Research defines a recession as a period between a peak and a trough in the business cycle where there is significant decline in economic activity spread across the economy that could last for a few months to more than a year. While the NEBR agrees that most recessions will, in fact, have consecutive quarters of negative growth in real GDP, it says that's not always so. It highlights the conflicting signals that can sometimes arise from different perspectives to measuring GDP. So based off of, sort of this description, it doesn't seem like there's a clear-cut definition of what a recession is, right? So I wanted to then just go over some statistics when it comes to GDP. So let me just move this out the way so you guys could see it. All right, so this let me see. Here we are. Let me zoom this. So right now I'm on Trending Economics. You guys could check this out. They have a lot of different information on GDP, trade, government, inflation, prices, taxes, housing, so forth. So I use this resource a lot. Now, this is just looking at GDP. I guess this goes back to 2022. So you could actually see by each quarter. Now, one of the definitions is consecutive quarters of negative GDP growth. But as you can see, actually, let's go back 5 years. Oh, okay, so technically, if we go back to Q2 of 2020, Q3, and Q4, these were consecutive quarters of negative GDP growth, right? But when we're looking from Q1 onwards, all you see is positive GDP growth, right? So based off of that technical definition, there's not a recession. But I'm just curious to see what you guys actually think about this. So let's just go through the comment section real quick. I want to see what some of you guys think about this. So Debt Vanisher says, yes, project 2025 will make things worse. Explain that a little bit, right? So we have Ruben. Yes, we're in the beginning stages of a recession. Quota Video Production says assets or digital crypto assets. buy crypto. And they also say we're already in a recession, right? So a lot of people say that, okay, you have record home prices, right? So a lot of people who own homes have a lot of equity in their home. And then when you're also looking at the stock market, right? Let's actually pull up some data real quick. So let's go back here. All right. So when we look at the markets, and let's just go back. How do we go back? All right, so this is just the U.S. stock market index, right? So just looking historically, and this might be a little hard to read, but yeah, I mean, the stock market overall, when you look at the long term, is performing well, right? So using that metric, you could say, okay, the economy is doing well, but it's only going to be among those who actually own stock or actually own real estate, right? So again, I think it's very subjective depending on who you're talking to. And then at the end of the day, I don't think there's a true consensus on what the definition of a recession is. But, just based on conversations with certain subscribers, clients, and then when we're talking about, just business owners, right? A lot of people are feeling the higher inflation, the higher cost of capital. Banks are tightening up, right? So it depends on, your perspective. So we have Shin VS is so expensive to live. Yes, that's sort of the sentiment that a lot of people are sharing, right? So Zaya says, what I think is that the feds will cook the data to fit their likings. And honestly, we can't do nothing about it. The economy will look exactly how they want it to look. That's a very interesting point. I worked at a lot of federal government statistical agencies, and, a lot of times, so usually how a lot of these research topics begin, you start with a hypothesis and then you go out and find data to support that hypothesis. And what I would find is that for someone who actually did statistical programming, I would get my assignments from, in the government, they're called principal investigators, right? So these are like, PhDs who are subject matter experts, and they might focus on a certain research topic. And so a lot of times, they're not really crunching the numbers, but they're really interpreting what those numbers mean. And so I remember times when, I would be given a data set to analyze, various different variables in that data set. And then a lot of times these principal investigators will come back and say, look, the data doesn't support my hypothesis. Maybe we can recategorize some of these variables, or, to your point, make the data fit whatever the narrative is. And so I definitely can agree with that. So Dwayne Mayweather says, I really believe it's the transformation of wealth. Yeah, definitely. So one thing I will say is that there's certainly opportunities. A lot of people talk about, this impending housing crash, and I'm going to get to that in just a second and just give you my thoughts on that. And as a reminder, I'm not a real estate expert, guru, anything like that. But I do want to just give you my perspective on, my thoughts about the whole real estate market, right? Because I was not aware how much rent prices have gone up, right? So some of you might know who are on the Patreon, right? So I'm building a home at this moment. And so I was kind of trying to figure out, what to do, with my current home. Should I sell it? Should I rent it out? What the plan is with that. And it was brought to my attention that rent prices recently have gone up. So then that made it even more attractive to say, okay, maybe let's just hold on and see what actually happens, right? But when we're looking at some of the housing data, let's go to the housing data. I just wanted to share this with you guys. So where are we at? Oops. So right here says the median price of a starter home in the United States was $243,000. That's as of June 2023. So in June 2023, the income needed to purchase a starter home was $64,500, which is an increase of 13% from 2022. This is based on the idea that a home buyer must spend no more than 30% of their income on their housing payment, right? So if you're spending over, let's say 30%, that's what's considered, I guess, housing debt, right? Or being burdened with your monthly housing payment, right? So there's a certain percentage you want to stay under when it comes to housing, right? So this chart right here shows the median price of existing homes and how that's risen over time. So you can see based off of June 2024, $426,900. That's the median home price in the United States. So that means half of the homes are priced higher than that and half are priced less than that. And so when we're looking at some of these statistics, according to the National Association of Realtors, the median price for existing homes, so ones that are already standing, not new construction, was $387,600 as of November 2023. All right, so as you can see, the median price of existing homes has risen sharply since the pandemic. So just from a lot of the conversations that I've had with people and just sort of my experience with a lot of, real estate, it seems like it's becoming less and less affordable. And so I can definitely see a lot of people's pain point when it comes to what's going on in the real estate market. And some people may not even have that opportunity to get in on the ground floor when it comes to real estate, right? And the other thing I wanted to just chime in is that with real estate, I know there's a lot about, get into real estate with no money down. I think you definitely need to have some type of capital, whether that's for your down payment or what a lot of lenders are looking at is post-closing liquidity. So usually you want to have some type of reserve. So if the prices are going up, it's getting harder to qualify, harder to save a down payment. Because if you're waiting around for a real estate crash, which has not happened yet, by the time, let's say you save up enough money to buy a house or save up that down payment, that new price that you're looking at in the future is going to be higher. So it's almost like a moving target. So I feel like, that's going to make it a lot harder. And then you add in a lot of these corporate landlords who are just buying up, thousands of homes and just having them for rent. So let's go to another comment. 10 million Americans did not pay their mortgage in June. We're heading into a crisis for middle-class families, but Wall Street is still partying like it's 1929. So I did see a video. I think Erica Williams put out a video the other day, maybe yesterday, talking about that. I haven't looked at the data specifically, but yeah, I mean, if that's true, that's definitely alarming. And another thing I wanted to point out as well. So I've been looking into, different auction sites where they're listing a lot of these foreclosures or bank-owned properties. And I've literally seen an explosion of listings that are coming onto the market. One I wanted to share with you. This is one I've actually used in the past. Some of you could check this out. It's called Hubzu. So Hubzu is basically, they have bank-owned properties. They have, foreclosures. They have what's called the CW Cot Second Chance program. And so, again, you can log into this site. They have different auctions. So, for example, this is like a bank-owned property in Baltimore. You basically can bid on it. And then, you basically can at the end of the auction, whoever has the highest bid, you then would have to put down your deposit, go under contract on that property. But this is definitely a site that you could check out. But what I have noticed is that a lot of listings have been, populating on, this site recently, as well as some others, auction.com. There's a handful of them. But yeah, I think it all depends, right? In terms of the housing market. Every market is going to be different. Where I'm at in the DC metro area, because the demand is so high, we haven't yet seen that. A lot of these properties are still getting snapped up. I could even tell you when it comes to just the competition with some of these auctions. I mean, you're dealing with a lot of well-qualified buyers. So it's, so I guess there's two ways to look at it. Some people might look at it as an opportunity. Others might look at it as doom and gloom. So Quota Video Production says people have a lot of equity in their homes, but can't access it at the moment because of the high interest rates. That is very true, right? A lot of people do have a lot of equity in their properties. But the thing with home equity loans, lines of credit, you still have to qualify, right? So you still have to provide, income information. You still have to have a certain credit score, and you have to have a certain amount of equity because they'll give you essentially a certain loan to value based on the equity you have in the home. But I have seen stats that a lot of these HELOC and home equity loan applications are going up. So, that's definitely a valid point. Y'all have it super duper easy in the States still. I guess it's all relative, right? Let's see. Who else do we have? The Walla Mala says, Hubzu, I would sign up, but probably only for American citizens. I'm not quite sure. So here's another thing just to consider, right? I've been purchasing real estate, recently. And one thing I've noticed is that a lot of the buyers are foreign buyers. For example, like a lot of my future neighbors are, Asian, Indian. What I've seen a lot too is a lot of people buying houses for more like generational type living, where you might have, the parents, the aunts, uncles, cousins, grandparents, all living in the same house, stacking bread, sharing resources, kind of like the group economics. But just in terms of like being able to purchase homes, I mean, I know a lot of buyers are, foreign nationals. As a matter of fact, I have a partnership with BMO Harris. And so BMO Harris is actually promoting these cross-border mortgages for Canadian citizens. So for those who don't know, BMO, which stands for the Bank of Montreal, so BMO Harris, the US-based subsidiary, they're promoting these cross-border mortgages. So basically, Canadian citizens can get these mortgages to buy homes in the United States. And a lot of these sponsors have been pushing this hard recently. So I think that's another reason why, when we're talking about the housing demand, and why I think that's going to keep the housing prices elevated for the foreseeable future. So Biz Now 24 says they're not going broke. The banks are trying to have a way to control people with the money. I mean, that may be true. Dwayne Mayweather, it's time to create a community with one common purpose and buy up everything. Yeah, I think, buying land and, buying real estate is always going to be a long-term play. And another thing I wanted to just add before we, go into the next section is that when it comes to real estate, this is just my personal opinion. I don't think real estate is a good option for if you're looking to cash flow or replace your income, right? Not on the one or two properties. Maybe if you have scale and you're able to get a lot of units and you're not going into debt to acquire that, you might have enough spread. So like I do a lot of these DSCR loans. And so with a DSCR loan is basically a debt service coverage ratio type of loan where it's not based off of the individual's financials, is based off of the ratio of the potential rental income and the debt service. So the principal, interest, taxes, insurance, homeowners association dues, if that's applicable. But it's basically looking at, okay, how much is left over after covering the debt service? So here's just an example. Let's say the rental income is $1,200, the debt service is $1,000. So, the total monthly with taxes and everything is $1,000. So the DSCR on that would be 1.2. So you would divide the rental income by the debt service. So 1,200 divided by 1,000, that gives you 1.2. most DSCR loans want a ratio of about 1.2, 1.25, depending on the lender. I mean, there's some like ACC mortgage where they'll do a 1-to-1 on the DSCR, but oftentimes with those types of loans, if you're putting down the minimum, usually it's going to be 20% down. There's not that much room left over when we're talking about rental income, right? Or cash flow from rental income. Now, maybe if you're just buying properties outright, renting them out, you'll get, a better cap rate. But from what I've seen, it's like the spread is so small. So you really want to focus on the appreciation. And again, I'm not a real estate guru or anything like that, but from my experience, that's always been a much greater than the rental income is the appreciation. All right, so next question. So we have the car industry looking pretty weak right now as new cars are simply priced out of each reach of regular working people. So I did a video yesterday on car putty. Now, I think for consumers, the auto industry is actually improving, right? Because now you have a record number of repos, and I'm actually going to go into some data real quick. So bear with me one second. Let's jump over here. I wanted to share some consumer data with you guys. All right, so let me hide this. Where are we at? Okay. And I'll get to the questions in a second, but this was a report that TransUnion just recently put out, the Credit Industry Insights report, which is Q1 of 2024, right? So this is literally coming from TransUnion, which I believe is like the number 3 largest consumer credit reporting agency, right? And so this is given trends at both the account level and the consumer level. And so they did an analysis of consumer loan products, including credit cards, auto, mortgage, home equity line, personal loans, revolving and non-revolving loans. So before we dive into this, I wanted to give you guys just some of my hypotheses, things that I've seen just working in financial services. So one thing I've been talking about recently is how in 2024, we've seen a tightening in the underwriting. So you have a lot of lenders that are more or less focusing on prime credit borrowers. And so it's harder, let's say if you don't have prime credit or super prime credit. So super prime is going to be, those 750 and higher. And then you have, there's a couple different categories. You have super prime, prime, near prime, and then you have subprime, right? And so I've been talking about how a lot of people with less than perfect credit recently have not been able to get approved from a lot of the major banks, right? Because of what's going on. And so I actually was able to see that just in loan conversion rates. So I get to see a lot of back end data through partnerships with different fintechs, different banks and so forth. So I noticed that, yes, people with excellent credit, verifiable proof of income, you're still able to get money from the banks, no problem at all. But I noticed with I would say mostly like the near prime. So people who are in that, 670, 660 range, it's been harder in 2024 than in previous times. And this report that we're about to go over does kind of support some of the things I've been talking about. So we're going to go over, again, auto financing, bank card, mortgage, and also unsecured personal loans. So here's some of the key trends in the economy, right? So we have consumer spending has fueled recent economic growth as the increase in GDP has moderated within the rising interest rate environment. Now, here's one thing I want to go back to, right? As I was talking about earlier in the live, where there's kind of the, two sides of the story where when you ask, is there a recession going on or is the economy doing well? I say that a lot in the community section just to get a sense of what you guys think about that. And when you look at the raw data in the technical definition of a recession, no, you also have the stock market trading at all-time highs. You have, again, as someone mentioned, a lot of people have equity in their homes, and you have the GDP that's, being supported by consumer spending. But the thing about it is that a lot of that consumer spending is coming from credit or borrowed money. So it's only so long, I believe, that, you can keep that up. Once the credit dries up, then, it'll be hard to, keep that GDP up as well. Unemployment has also been relatively low. Now, I'm not going to dive too deeply into this because, in my opinion, I think the unemployment statistic is just extremely flawed. I think we should really be looking at the labor force participation rate instead of the unemployment rate, because with the unemployment rate, after you stop looking for a job for a certain period of time, I think it's 6 months, or after your unemployment benefits run out, you're not even included in the total, right? Discouraged workers are not included in the total. There's a couple different things that is manipulated with the unemployment rate. I think we should be looking at the labor force participation rate, because the labor force participation rate actually tells you the percentage of working age adults who are actively employed. Now, actually, I'm not going to get into that, but I believe we're around like 62, 63%. So what that basically means is for two out of every three people who are able to work, only two of them are working, right? So, and I believe it's also the working age. So I believe from like 14 to like 64, something like that, right? So that, anyways, you also have inflation, right? So the cost of living has increased significantly since 2021. And that's one of the reasons why the Fed had increased the Fed funds rate. And, we see high interest rates right now. That was one of the tools that the Fed used to combat inflation. And in my opinion, I think it actually is working to a certain degree. One thing I also want to say about the inflation reports. So recently, I think maybe last week or the week before, I don't recall, but the inflation numbers had come down. So basically what that means is that the cost of living, what that basically means is that inflation, it's still increasing, but it's not accelerating as fast. So I want you guys to really understand what that means when they say inflation is coming down. So you have two things, right? So one way to describe this, you have speed and you have acceleration, right? So, you could be speeding, let's say let's say you're going 50 miles per hour down the road. You hit the gas. Now you're going from 50 miles and now you're going 75 miles, right? But then let's say you then go from 75 to 85, right? So your acceleration is actually going down, even though the speed is continuing to increase. So basically what this means is that prices are not actually coming down. Prices are still going up. They're just not going up as fast. So that's the play on words when you hear a lot of these headlines when it comes to inflation. You just have to read between the lines. So looking at some of this credit data. So this chart right here shows increasing number of consumers have moved into this super prime and subprime tiers as compared to Q1 of 2021. So super prime is basically like those with really good credit, and then subprime are those with really bad credit, right? So you see over here, it might be hard to see, but as of Q1 of 2024, super prime increased to 40.2%. And then subprime actually increased as well to 13.8%. The way they define super prime, so it's right down here in the small print. So super prime is a Vantage score of 781 or plus. Subprime is a credit score of a Vantage score of 300 to 600. So pretty much what this means is that you just have more people going into, or a higher percentage of consumers going into subprime, and then a higher percentage going into super prime. And this is interesting because, so basically what this is saying is that 40.2% of consumers are in the super prime. So that means Vantage scores of 781 plus. Yeah, I guess the data I look at is just skewed. Now, here's another thing to keep in mind. So this shows balances have been increasing across all products driven by consumer spending and a significant increase in the overall cost of living. So this makes sense because if prices are going up, that means the things that you're charging on your credit cards are also going to go up, leading to higher balances, right? So this is pretty self-explanatory. Now, the balance growth by product, as you can see, leading the way is going to be credit cards and home equity loans. And I'm not sure why home equity loans would be the case. You also have unsecured personal loans as well increasing. So this also shows balance growth across products has resulted in an increase in the average minimum payment due per consumer, right? So a lot of credit cards might have like a minimum percentage, let's say 1% of your balance or 2% of your balance. This is no surprise because, again, if you're spending more on the credit cards because of inflation, higher cost of living, then basically, you're going to have a higher minimum payment because the percentage of whatever that balance is just greater. So very interesting. Now, let's see. This one says debt levels rise and the percentage of consumers paying more than their minimum payment has been declining. So this is interesting. I want you guys to pay attention to this. So let's go back to 2020. Okay, so you can see right here, it was really low. So the percentage of consumers paying more than their minimum payment was about slightly under 73%. And as you can see, it's been increasing. So the way to interpret this is that pretty much, the percentage of consumers paying more than their minimum. Okay, so basically this means that people aren't paying off their balances at the same rate they were, right? So again, percentage of consumers paying more than their minimum payment has been declining. So that means less people are paying more of their balance, which is not a good thing. This one, serious consumer delinquency rates have been trending higher across most products. As you can see, when it comes to unsecured personal loans, that's not a surprise, right? Because when you have that fixed payment and then, things happen in the economy, it's going to be harder to maintain those payments. Bank cards, credit cards, and then down here is mortgages. Now, usually, you're going to have a higher credit profile and income when it comes to people who have mortgages, right? Because to qualify in the first place, you have to have some type of, financial credentials, right? Either income or, somewhat of a decent credit score. Here's another stat. The increase in serious delinquencies has led to higher charge-off volume. So this is another thing, right? So we're seeing an increase in charge-off volume. So as of Q1 of 2024, we're looking at about an increase of about 8.4 million in charge-off volume. Charge-off volume and then charge-off balances. So as you can see, it's increasing. So this is not a good indicator. Bankruptcy filings increased 10.9% year over year, but remain well below pre-pandemic levels. All right. This is one that I was talking about how banks have been tightening up. So it says in response to higher delinquencies and charge-offs, lenders have tightened their underwriting standards. So right here shows in Q1 of 2020, lending got really tight. We had the, PPP, stimulus, all that. Banks opened up. So, they were doing quantitative easing. So right here it says expanding. And then as you can see, 2023 going into 2024, we saw a tightening. But now you can see, I guess between, let's say, Q1 of 23 or not Q1. So I think this is probably going to be more like Q4 of 23 to Q1 of 24. It's actually trending back downwards, right? And this is something, again, that I saw just in conversion rates for credit cards and loans and things like that. Banks using a lot of new verification systems. They're clamping down on fraud, just tightening up overall, right? Especially when they're taking a higher rate of delinquencies and charge-offs. So the banks are just trying to safeguard their assets as well as just tightening up their underwriting. So again, as I was saying, a lot of the things that I was saying, the data is actually backing this up. And this is, again, published. This particular report was from the Board of Governors of the Federal Reserve, which is known as Fred, right? And you could actually check out a lot of this. Now, this is interesting as well. This shows, okay, tightened standards have resulted in declining origination growth across products over multiple quarters. So I was saying how basically loan originations have been declining, right? So the growth in new accounts has been declining, and this has it split up across different types of products. And so if you kind of look at these, how this is color coded, so we're going from Q3 of 2022 to Q4 of 2023. So that's about 6 quarters. And you can see for most products, so when we're looking at autos, the originations have actually, decreased. The only thing that really decreased is going to be like home equity loans and student loans. When we're looking at unsecured personal loans over here in the left side, on the right side, that has actually been decreasing as well. And same thing with credit cards, right? So again, this is no surprise. This is something that I see a lot in the back end dashboards when I'm looking at, conversion rates for, different products, credit cards, loans. The loan origination growth has declined overall. I'm not going to get into all of these indicators because we can be going on, all day. Another thing I wanted to point out was the auto loan origination volume as well. So you see that kind of peaked, let's say, it looks like in maybe the beginning of 21. I know when I was looking I did a video when I bought one of my business vehicles back in 21. I bought a Hyundai Palisade. And I remember at that time, the auto market was just crazy. You couldn't get a car. Everyone had money. So if you're in like a major city, you had to go a little further to get a car, or maybe the car that you wanted, maybe in like a smaller town or something. But things have changed. Someone made a comment about whether or not it's a good time to purchase a vehicle. I think right now is probably the best time in years because you're getting a lot of these repo cars that are coming back. A lot of people who lease cars in 21 and 22, those leases are coming due. So, a lot of people, handing their keys back. Now there's a lot of inventory at these dealerships, and it's harder for people to get qualified. So if you are a qualified, borrower, maybe you have cash, you might be able to get a good deal on a car right now. So let's see. I'm not going to get into all of these because again, if anyone's interested, I'll pin this in the chat if anyone's interested in just looking at this. But based on everything that I've been going over in terms of consumer indicators, it would seem that things are not going in the right direction, right? In terms of, auto loan delinquencies, home affordability. There's just a lot of economic headwinds. Now, again, I feel like when that question is posed, it's going to be variable, or I guess sort of situational, right? Based on your situation. Some people, you're doing well. It doesn't matter if it's a downturn or, boom, you're still going to be okay. But I wanted to share just a recent observation I made. So last week I went to pick up food. Now, I don't usually dine out that often, but sometimes, I'll go either pick up food, I'll order in, or, use one of these delivery apps. So I went to a place called Copper Canyon. So for anyone who's familiar with the DMV area, it's not, I wouldn't say it's not like a 5-star restaurant, maybe like a 3-star. You could easily spend, let's say, a dinner for 2, easily $75, right? So like the meals are probably in that $25 to $30 range. If you get like, a steak or crab cakes or something like that, you might spend, $35-40, but easily for two people, you could spend $75. So I went there, ordered in. Mind you, I went there on a Friday at 5 p.m. Now, this place has like a bar, and I used to go there a lot, like back in my early 20s. And so I went there on a Friday evening, 5 p.m. So usually you'd have the happy hour crowd, people getting off of work. Normally when I go, the one that I would go to, it's in a pretty busy area. So usually I have to go park all the way up at the top of the garage, walk down, and then usually you have to make an appointment just to get in. When I went there, I pulled right to the front. I went in, there was literally one person in the restaurant beside me. And so when I went in, there was like a bunch of front of staff people at the front just waiting, sort of anticipating people to come in. And so I went to the bar and ordered to go. And so I was sitting at the bar for probably like 20 minutes and not one person walked into the restaurant that whole time I was there. And I was actually on a call there, and the place was so quiet that I thought that people were like listening in on my phone call, right? That's how quiet and dead it was. So, and again, this was last week. So I was just wondering, like, is that the case? Like, are people not eating out as much? But when you think about it, you go to eat out, that doesn't include drinks, dessert, tip, gratuity. A place like this, you could easily spend $200, like if you're getting, drinks and appetizers and all that type of stuff. So that was an interesting observation that I made, that this was a fully staffed place during a prime time Friday evening, and there was literally nobody in there except for one other person and myself. So anyways, let me get back. I know we're kind of behind on the questions, so let's go back. Where are we at? So Zayat says, I'm 2 weeks overdue for my monthly meeting with you. Could you please share the link? Oh, yeah. Hit me up on Patreon. That's cool. Let's see. RE equals tenants having more rights than you. Yeah, I know recently there's been a lot about like the squatting situation in certain states. I know that could be a nightmare. LGS Inc. says, it is for us people who have C Corps. Real estate is a decent chunk of our portfolio. Yeah, I mean, real estate, I feel like, is just a great overall way to preserve wealth, not necessarily cash flow. I feel like there's a lot more scalable business models if you want to generate cash flow. But if you already have money that you want to sort of preserve, I feel like real estate is definitely a great way to go. So Debt Vantager says, all we have to do is diversify our portfolio, get your credit up, use money as a tool to learn future companies that be around, get into solar energy, NVIDIA, Apple, Tesla. Absolutely. I agree 100%. Now, people have a lot of different like philosophies on, what's the best way. Is it real estate? Is it stocks? Is it, running a business? And I say all of the above, right? There's different, people might have different, well, I'll put it this way. I feel like people have certain biases based off of what was successful and what worked for them. Now, for me, at least, it's definitely been business as well as real estate. Not so much the stock market, right? And not to say I don't invest in it, but I also feel like with a lot of things, to really get economies of scale, you're going to need a lot of capital. So that's always the way. I never looked at like, okay, let me put all this money, put however much into the 401k and then have $1 million portfolio in 30 years. I always felt that make a lot of money and then put it into an asset after you have a decent amount of capital. So A1 says the banks have a lot of bad loans in their book, according to Lucky Lopez. Oh yeah, shout out to Lucky Lopez. I do check out his videos about the auto industry. So they were giving auto loans like candy to anyone, even at 150% over value. Yeah, I mean, that's true. I can definitely say a lot. I think a lot of people got these overpriced vehicles, to be honest with you. And mind you, there's nothing wrong. I don't have a problem with people, spending money on vehicles if that's, what you're into and you can afford it. But I see a lot of times where, people should maybe be buying a cash car or something that is within their means. But again, people want what they want at the end of the day. The Walla Mala says car industry charging $1,000 per month. Yeah. So I'll say this. A car that's, let's say you get a 60-month loan right now, and in a car that's, let's say, $50,000. I mean, your car payment is probably going to be around like anywhere from $900 to $1,000 a month. I mean, that's just the new norm. So we have, so he says, I think it's weak too, because they're basically trying to get us to buy these electric cars, which a lot of people don't want right now. Plus the hybrids were a good option, but they want it to phase out. Yeah. I mean, I don't know. I don't drive. I don't have a electric car. But again, I think it's the future. Like a lot of these companies coming out with electric vehicles. I think there still needs to be a balance, and that's something that's probably going to take a long time before it's fully, adopted by everyone. But I could say in my area, like in my community, the most popular vehicles by far are Teslas. I would say Teslas, and then you have these Honda Pilots, Honda Odysseys. Like those are like the most popular cars. Dwayne Mayweather says, I need to connect with you. My very close friend. She's a real estate mogul. You can definitely check a bag. Yeah, definitely. Okay, so let's go. All right, so who do we have here? The Bag Up says, you are the plug. I started using Kickoff back in April. Recently signed up with Credit Pros. I was at 540s now. I'm at Equifax 611, Experian 615, and TransUnion in a matter of 3 months. Yeah, I mean, the best thing you can do is take action when it comes to your credit, because your credit by itself is not going to fix itself. So no, congratulations to you. Definitely keep that up. Another thing I wanted to just chime in on, this is kind of unrelated, but recently a lot of people have been asking, let's say if I do a video on a credit product, a lot of people ask me, hey, can I get approved with bad credit? Now, what I would say is that's the wrong approach, right? You should address the credit first, because right now, and I would say with a lot of the prime lenders, they essentially have a zero tolerance for derogatory information. So unless you have some type of like mitigating factors, such as a very high income or some type of collateral, I wouldn't be applying for credit with subprime, right? So if you have less than a 600, you're really at a low chance of getting approved for anything, especially right now. I mean, I did a video on Patreon a couple weeks ago about a client who really wanted to get in with First Tech. And this is someone with 820 credit scores, 6-figure job. So First Tech, for those who don't know, is very sensitive to people who have a lot of available credit. So like, even if you have really good credit or income, you can still get denied. So they applied to First Tech, I think with like an 826. So they pulled their Experian. 826, they had to connect through Plaid, right? So, they have a really good job, and they wound up getting denied from First Tech, and they were shocked. And so, sometimes it's not always about having the best credit score, highest credit score, thickest profile. Some institutions have their, particular rules. So I say all that to say that even people with really good credit are still getting denied from banks, right? So, if you have less than perfect credit, then just wait. I would just wait until you're lined up. The last point I wanted to make with that is, and I'll be real with y'all. So I remember I tell the story all the time. I had some late payments on an old closed student loan. So I paid off the student loan, but the account was still on my credit and it had negative information. So I remember I was only getting approved for like, $3,000, $5,000 limits. So I had all positive accounts except for that one negative account. After that negative account was removed, that's when I started to get the 15 and the 20 and the $25,000 personal credit card limits. So it still does affect you. That's something you want to get addressed. A1 says, so the economy is really rigged and credit is the last remaining glue and bubble keeping it all afloat. Most Americans will go under if credit dries up as they don't have $500 saved. Man, as much as I hate to say, I 100% agree with that. And so here's sort of the fallacy as well. Now, a lot of people, well, I'm not going to say a lot of people, but there's a certain sort of anti-credit sentiment online. I'm not going to throw out any names, but you might know what I'm referring to, where it's like chop up your credit cards, don't borrow money, so on and so forth. And again, everyone has their own opinion, but if credit were to all of a sudden go away, if everyone adopted that, I'm not going to borrow money, the economy would literally implode like instantly, right? Because the economy is, I believe 70% of the economy is based off of consumer spending, and a lot of that money is borrowed. So if there's no borrowing going on, you basically, the economic output would only be based off of savings and what money people actually have saved. And as we've seen since about 2021, the savings rate has gone down. So, literally, like if no one had access to credit, the spending would go down, businesses' revenue would start to go down, and it would create a lot of problems. So like a lot of people say, okay, credit is a bad thing, you shouldn't borrow money. I don't totally agree with that. I agree in certain cases. I think business credit has a better use case than personal credit, because with personal credit, all you're going to do is rack up consumer debt. With business credit, there's a lot of cases where you can leverage that. Like a lot of our clients are leveraging 0% APR credit cards, SBA loans, right? Where they could actually acquire a business that's generating cash flow, repay the loan, and then, continue to cash flow that business. So I think it's all going to depend. But yeah, I definitely 100% agree. A lot of people are living off credit. And the other point I want to make about that is what I've also seen is that some people look at credit as like the end goal or the end result. Like it's cool to get approved. I know, you get sort of a hit of dopamine when you get that approval, but that's really not the time to be celebrating, right? It's just a tool that you can use to perhaps get access to something, and then hopefully use that to improve your quality of life. Like, for example, if you finance a vehicle that gets you to and from work so that you can make money and take care of your kids and things like that, you could justify that to a certain degree. But, getting credit cards so you can then get designer clothes, I don't totally agree with that. Or to, let's say, finance exotic cars that you really can't afford. So they have different use cases, but yeah, I totally agree with that. Like a lot of people are living solely off of credit. Israel Jackson says, I keep my debt ratio of 5%, credit report 160. Yeah, 5% is a really low, DTI. Now, another important thing when it comes to DTIs are when you're purchasing a home, right? And again, any mortgage professionals, you definitely chime in, but most of the mortgage lenders want to see somewhere, I guess, less than like 40%, 41, 42% DTI. So definitely be mindful of that. Your credit activities, if you're considering a large purchase. The boss lady, Nikki, says, if you aren't trading in a car bought during COVID, it's a great time. But since values are way down. Yeah. So my whole thing about it too, like I know a lot of people are sort of hung up on, okay, a car depreciates and, you're losing money, whatever the case is. I mean, that's a given with most, 95% of vehicles, they're going to lose value. So that's just something you have to accept. Like, unless, let's say you're buying cars and, you have a business or you're marketing or something like that, then you can justify it, right? As a lot of you guys know, I bought a BMW XM, which I think I paid about a little over 160 for it. But I use it for marketing. I use it for content. It's opened the doors. I've actually booked a handful of clients just out and about, right? So like in certain use cases, it makes sense. Like if you have a business or a company you're promoting, I see a lot of people with like these cyber trucks. And then, you also talk about the tax advantage and the bonus depreciation. So there's ways that you can actually turn it into a positive. But my opinion is that, most personal vehicles are not really going to be an asset, except for the point that it gets you from point A to point B. And you're able to navigate, right? Versus, let's say, if you had to use public transportation, is going to waste your time, right? So there's cases for both. I personally don't really think about depreciating vehicles. For one, I never plan on like returning it or trading it in or anything like that. So, let's see what else. Sorry, let's go to this one. The Walla Mala says tipping is a scam. So here's the thing about tipping, right? And I always make sure to tip because, for one, you got to put yourself in the shoes of, let's say someone who's bringing you your food, right? I remember some days it'd be snowy or icy outside, and I would order, DoorDash, and I would make sure to tip, really well, because for me, the way I look at it is that they're providing a service, bringing your food to your front door. So again, I feel like that's a premium. Now I've seen cases where people are getting all this delivery and not even tipping people. So I always make sure to tip. And then even if it means like supporting a local business, sometimes even if I pick up food and I have to go there, I still tip, whoever. That's just, my personal preference. You also got to think, people are trying to make a living as well. And, if you can afford to go out and eat and not tip, then I think you shouldn't be going out to eat, right? If that's a big problem, I don't think you should. I think you should just eat at home. Quota Video Production says, I experienced the same scenario when I pick up some dinner from Wingstop at 5 p.m. I think you were replying to the old comment I made. Chris Lopez says, Bidenomics send all our tax money overseas, make us pay for more. Yeah, so I'm not going to get into the politics of, economics and everything like that. Maybe for another live, we'll dive into some economic policy from both sides. But yeah, the tax situation is I've learned to be somewhat of a sensitive issue. Now, back in the day, right, I would always wonder, like, why are all these people complaining about, tax cuts and things like that? And you really don't get that perspective until you have that first big tax bill and you're like, wow, that's a lot. And it almost seems unfair, when you think about it. The way I would look at taxes, not necessarily the amount of money, but I think about it in terms of how much time did I actually spend to generate this money. This has to go towards taxes. And then when you think about it in time, so it's like, all right, I work 2.5 months out of the 12 months in the year just for that to go towards taxes. So when you think about it like that, so, that's, I don't know, however many 75 days that you just worked, 8-10-hour days to make money, and all that goes to taxes. And then you don't really have a say in how that gets divvied up. And then, there's all these proposals about, increasing the corporate tax rate from 21% to 28%. There's talk about taxing unrealized gains, which is insane. So again, maybe another live we could talk about that. Now, I wanted to go over this real quick before we get too far off topic. Now, there's a report that came out. I talked about this on my other channel a while back, not on the main channel, but this right here is a report that came out over 7 years ago, right? So for those who can't see, let me zoom in a little bit. It's called The Road to Zero Wealth. All right. So this was published. I don't know if you can see it. This was published in September of 2017. And so pretty much this report is basically saying or predicting by 2053, the median net worth of Black households in the United States will be zero. Now, let me just zoom through this report real quick, just to kind of give you some background. You have a bunch of authors from these different social policy research organizations that basically came together and they analyzed Census Bureau data and a couple other federal government data sources as well. I'm actually pretty familiar with some of these organizations because, again, I worked in the research policy space, analyzing data. So some of these companies I'm pretty familiar with, but I just wanted to share with you guys exactly what this is saying. Let me see if I could pretty much. Okay, so right here, as you can see, major disparity when it comes to wealth, right? So this shows the median household wealth for white households, Black households, and Latino households, right? So you see right here, when it comes to, Black households, we have with durable goods, 11,000, and without durable goods, 1.7K, right? So looking at the white households, you got 134,000. And then with Latino, you have 14,000. But let me see if I could pull this report. Okay. So I think it is, and bear with me 1 second. All right. So I don't know if you guys could see this chart, right? So they analyzed data from 1983 to, I believe it was 2013. So that was the time frame. So a 40-year, I believe that's 40 years, 40-year time frame. And basically they made these predictions. So I don't know if you can see, this is kind of hard to see, but back in 1983, the median Black wealth was $6,800. In 2013, it was 1,700, and they were saying in 2024 it's 12,000 or 1,233. So you can see it's on this downward trajectory. Then when we're looking at white households, 116,800, and it's increasing not by a lot, but still there's this huge disparity. And as you can see, this shows the racial wealth divide. Again, you have 2013, 2023, and then 2043. So this red line is Black households. The blue is Latino. The yellow is overall, and then the darker blue is white. So overall, as you can see, it's not looking good, right? It's on that downward trajectory. So again, this is a report that came out 7 years ago, and a lot of these, theories are pretty spot on. Let me see if I can pull up another chart to basically show. Okay, so here we go. And let me know if you guys can see this okay. And let me zoom in a little bit more. So this table right up here shows the median wealth from 2013 all the way out to 2073, right? So right here, it shows median household wealth in 2053. So this first column is for Black. And in 2053, it's at zero, right? So they're predicting the median net worth will be zero by 2053. And then by 2073, it's going to be negative $850. And then for Latino households, it's going to be zero by 2073. And then when you look at this, like this is going downwards, like the median household wealth is trending downward. And so it's actually gotten worse since 1983. So in 1983, let me see if so in 1983, I don't know if you guys can see it. It might be a little small on the screen. The median Black wealth was $6,800. In 2013, it was $1,700. So when you think about the percentage change was negative 75%, right? So if you think about that, 17 times 4 is 6,800, right? So it's getting worse. So 83 is how many years? 93, 20, actually 30 years. I'm sorry. I said 40 years, 30 years. So going back to this chart, right? The only group that's actually increasing is white. So it goes from, they're saying 116,800 in 2013. And then by 2053, 137,000. And here's another interesting point too. When we're looking at overall, irregardless of race, ethnicity, overall median net wealth or median net worth, household net worth is going down, right, over time. So in 2073 is going to be 40,800. So this is less than what it currently is. So like overall things are not looking good, right? And again, this is not my research. And again, I don't agree with everything in this report, especially when we're talking about what are the solutions to, erasing that wealth gap. But overall, like I said, you got to get your finances, your credit, start businesses, invest in assets, invest in real estate, invest in the stock market. But it's all about, getting in position. So if anyone wants to read further into that report, I'll post a link to that as well. But again, that report came out 7 years ago. So it's been around. It's been around for a while. So let's look at some other comments real quick, and then we'll wrap this up. So I wouldn't invest a lot in Tesla. Elon too political for me. So basketball guy said, I don't know what is going on, but pretty soon we're going to be screwed when the bank shuts down and it's going to be anarchy on the street. Now, I think we're far from that. I think there will be some consolidation. The bigger banks will buy out smaller banks, acquire them. So I think that will happen for sure. Ronell Goodwin says Palantir, I think, and Rivian. I actually see a lot of Rivian trucks on the road recently. Okay, let's see. And buy Bitcoin, all the Bitcoin you're able to. Okay, definitely. Galvanize LTD. How long till all collapses? What year, in your opinion? So here's what I'm gonna say. Let's look at this. And again, I'm not an economist or anything like that, but I'll give you my prediction. So let's look at. All right, let's look at some indicators, right? Consumer credit. Let's go to America, United States. All right, so when is this crash going to happen? So I'm gonna give you my opinion on when this is going to happen. So let's see if we could make this bigger. So you're again. Going back to this question, how long till it all collapses? Now, I don't know about all collapsing, but when I think, I guess the technical definition of recession, when that's going to happen, I think that's going to happen once the amount of credit accounts start to decline. And again, this is not based off of any, actually, it kind of is. I'll give you my support, right? Let's zoom in a little bit. I don't know if I can, let me see if I can do full screen. This is kind of hard to see. But anyways, I'll try my best to kind of illustrate this. So this chart right here shows the total number of credit card accounts in the United States, right? So back in the previous Great Recession in 2008, it peaked at about 496 million credit card accounts, right? So that's the total number of credit card accounts. And I know this might be a little small for you guys to see. But right here in Q2 of 2008, and I believe that's when the Great Recession was officially recognized, but it was recognized after the fact. Somebody correct me if I'm wrong. But as you can see, after that point, the number of credit card accounts decreased. Why? Because a lot of those credit cards were charged off. There wasn't growth in credit cards because a lot of the banks were not lending out as freely. So we had this period, let's say from 2008 until, let's say, Q2 of 2010. So basically a 2-year period where a lot of the credit was pretty much frozen, right? People weren't opening as many credit card accounts. And actually we saw a decrease from 496 million all the way down to 378 million, right? So that's a decrease of about 108 million credit card accounts over a 2-year period. Then we had, from, let's say, 2010 all the way up until now, right? Right now we have the record number of credit card accounts. Now, this only goes out to Q1 of 2024, but right now we stand at 596 million credit card accounts, right? And when we look at the growth from, let's just say, Q3 of 2019 to Q1 of 2024, I mean, that's an increase of over 100 million new credit cards, right? So 100 million new credit cards in, let's say, a 4-year period, right? So that's on average 25 million new credit card accounts every single month, right? Every single year for the last 4 years. So I believe when we're officially in a recession, and again, I'm not an economic expert, I'm just, giving my theory, I guess you could say. Once we start to see total credit card accounts start to decline, because again, it happened in 2008. Once we have the credit markets freeze up, we're going to have a recession because, again, I believe it's 70% of the economy is based off of consumer spending. So if people don't have the savings, where are they going to get the money to spend? It's going to be from credit. So if people are tapped out with their credit and the banks aren't lending out credit and people's credit cards are defaulting, so they're not opening up the I guess the net amount of credit cards is declining, I think that's when you're going to see less spending at businesses, less spending out at restaurants, less discretionary spending. And so that's just my whole thought on when I think things are going to collapse, if they ever do collapse. I'm not saying it is. Going back to this question, collapse already happened, Black Monday. Again, I think this is all based on your perspective, right? Some people think the economy is booming. It all depends on who you're asking, right? And the other thing I wanted to say is that, again, I think people's opinions and thoughts are kind of shaped based off of their experience. So if you've been doing extremely well the past, 4 or 5 years, and, you're doing better than ever right now, then it's probably hard to say that, you feel like it's a recession. But again, I talk to a lot of people on the front lines and it's a completely different story. So based off the technical definition of a recession, right? 2 consecutive quarters of negative GDP growth. No, we are not in a recession, but inflation, rising housing prices, the percentage of Americans who are paying off their credit card balances in full is declining. So I guess, the whole term that's being thrown around, silent recession or silent depression, I think there's some validity to that, right? It's not recognized, but how are people faring? Let's just compare 2024 to, 2021 or 2022, not individually, but just at an aggregate, right? Back then, the savings rate was much higher. People were able to pay down a lot of their debt, and inflation wasn't as bad. So, let's see. Pre-IPOs are where you make big money if accredited. Yes, absolutely. I 100% agree. Now, here's a little trick. Or I'm not going to say a trick, but actually, let me just continue to share this comment. So, one thing I learned after becoming an accredited investor are the types of investments that are actually available to you, right? So you have what's called private placement memorandums. So usually this is a way that private companies are able to raise money from investors. Now, with a lot of private placements or different investments that acquire accreditation, it's only going to be open to, I guess you could say, higher net worth or higher income individuals, right? And so usually you're going to get in before it goes public or before it gets acquired. So you're going to be able to buy into a company at a much favorable valuation, right? Versus once it goes IPO and goes public. I mean, to be honest with you, a lot of times when companies go public, that's basically the opportunity for all the initial investors to cash out. So they basically cash out to the retail investors and, just the normal everyday investors, right? But the real gains are, pre-IPO or a lot of these private placements. And that's something, I've been privy to a lot recently. I've actually done a couple private placements and, limited partnerships as well. And I think that's basically when you're able to get in on the ground floor. It's no different if you're, let's say, building a house from scratch versus, buying an existing resale, right? You're just going to get that cheaper price the earlier you are in that sort of investment cycle. Chris Lopez says, I got a car loan when I was 19. In 2019, the dealership wrote down that I made more than I actually did to get me approved. That's what's up. Let's see what else we got. Charlie says, I'm buying my first Tesla truck. I'm seeing a lot of those recently. I don't know. Like I was thinking about getting one, but then I was just like, I don't know. I mean, I think it's cool. I'm starting to see a lot of them, but I mean, I personally, I don't know if it's a fad, like something that you want to ride, for 10 years, but I mean, they're pretty cool trucks. I'm not gonna lie. Like they definitely stand out. He says, I have a derogatory late payment from Westlake Financial that's been paid off for years. What would you suggest to help get this removed? Basically, to get that, I would just dispute it, right? It's a closeout account with a late payment. Now, the time between the late payment, as that ages, is going to be less impactful, but the mere fact that it's still reporting, even though it's closed, is still going to hinder you. So I would just report that ASAP. My rule of thumb is once an account has derogatory information, is pretty much, no good at all. So I would just dispute that. We have a bunch of different companies we work with that can help you dispute, if you need assistance in that. Okay, what was the next one? Israel Jackson says, I had to keep good personal credit to get business credit. Absolutely. This is another thing, another fallacy, right? That you could just exclusively build business credit and have bad personal credit and still get all these loans and lines of credit. Business credit is usually just going to be supplemental. When I say business credit, I'm talking about Dun & Bradstreet, Paydex, PayNet, Credit Safe, Experian, all of that. So you still need good personal credit when we're talking about the small business realm. Now, once you get to the corporate credit, which usually is going to start, let's say once you're over that $5 million gross revenue mark, where you're not having to put your, personal guarantee on credit accounts, that's a whole different story. But 90%, 99% of what I talk about is going to be small business credit. Israel Jackson said, I had cash flow before I start using business credit. I've been in business for 25 years. That's the best route to go about, right? If you can. Now, I know I talk a lot about credit, but you got to be responsible in how you use the credit, because that's the vicious cycle that gets people into a lot of debt. When, let's say, you're borrowing money and putting that into an unproven business model. The best time to get credit is when you don't need it. Now, if you have a cash flow already, that's even better, because you can use those data points to then get access to more credit, right? But yeah, definitely having the cash flow so that you can, repay any type of debt. I mean, that's paramount. And let's say you get credit and maybe you don't necessarily have the income to service it. Well, just have the discipline to not use it, knowing that you don't have the money to repay it. Now, for me, I'll say this, like, I'm not going to use, for one, a lot of the credit I get is I get mostly to share data points with you guys. But whether I'm using my own money or using credit, I still have the same level of discipline when it comes to spending, right? The wall says, if you don't tip, they will spit in your food. Yeah, that's another thing too. Like, you're at the mercy of, these different companies when you go to dine in with them. So LGS Inc. says, if you're not using your credit and loans per assets that will make you money, you will just be back in the same place you started. Don't buy junk like cars, handbags, investing in the future. I totally agree with that. And again, the car thing, I think that's somewhat subjective, because some people might argue that depending on what area that you're in, a car could possibly be an asset, right? Instead of a liability. Now, if you don't have anything to sell or market or any product or service, and you're just, driving a G-Wagon and you're working a 9-to-5 job and you're barely able to afford it, then I think that's bad. But a lot of people I talk to, especially like in the, social media space, they say that having a nice car actually does help. Now, here's another thing I will also just chime in on, because there's, again, this whole saying about what is it? It's like this minimalist millionaire facade where, you drive a 10-year-old Toyota, kind of like the millionaire next door type of thing, right? I would say that works for certain demographics, right? In other situations, for example, it actually can work against you. I would say, especially if you're younger, especially if you're a minority. I'll give you an example. So let's say I go to an open house and, I'm in my mid 30s, right? Let's say, we're talking, $1 million homes. I want to look at it. And I feel like when you're younger, your appearance is going to be judged more versus if, let's say, you're a middle-aged person, right? Because they get the benefit of the doubt. Oh, you've probably been working for, 30 years, saved up money, have a nice 401k, you're financially set, right? Or, maybe you own a business and now you want to buy a house. So you don't necessarily have to overcome not getting that benefit of the doubt, versus when you're younger, I feel like you're not going to get that benefit of the doubt, especially, again, certain demographics. In certain cases in business, you may not even be taken serious if, people aren't able to kind of judge you based off of your appearance. And unfortunately, that's just the way it is, right? I can even point to examples on social media where it's like you could be giving out the best information, but people are going to judge you based off your appearance. And in a lot of cases, like, unfortunately, in society, things are very superficial. People will judge you based off of what you're wearing, what type of car you drive, what type of home you live in. I think it goes back to like people wanting to see proof, evidence, receipts. One of my mentors was telling me, we always joke about this because we both, when we met, we both drove the same car, which was a Nissan Altima. I'm sorry, Nissan Maxima, which I still, own. And he was basically telling me that, he was preaching, telling people to go fix their credit, build their credit, and nobody listened to him. Right. But then he bought a Mercedes, bought Corvettes, bought all these nice cars. And then he said all of a sudden people were inboxing him saying, let's do business together. Oh, I want to work with you. Right. So appearances do matter. So I will say to that point, it could be an asset, right? People just, judge you. Another thing I will say, depending on what neighborhood you're in. So the neighborhood that I'm, building my home in basically is I would say like, I don't know how to describe it, upper middle class, let's just say. If I was driving through there in, my Nissan, they'd probably call the police on me if they didn't know who I was. But because, when I do go there to, look at the lot and check in on the progress, they see I pull up in a BMW, I look the part, so there's really no questions asked. But yeah, that's just my whole thing about, I know there's like a lot of criticism about, cars and whether it's a waste of money. I think it's all going to depend on, what you're doing. The next, we already went over that. So BGP says, you're the GOAT. I appreciate that. I did the traffic block request successfully. That's what's up. Congrats. She says, you're the godfather of this ish. You changed my life more than twice. I was already all over credit boards, my FICO forms, but you changed the game with the credit sauce. Amazing. I appreciate that. Let me see what time. I'm way behind on these comments. It says, I told some people I know how to build your business with cash flow first before you get business credit. Absolutely. Getting the cash flow is your proof of concept. A lot of people try to use credit to prove a concept. And I think that's a recipe for disaster. You should not be borrowing. You should at least be bootstrapping your own funds to prove a concept. Unless, of course, you're buying a franchise or buying an existing business that already has, proof of concept, right? But if you're trying to prove a concept with borrowed money, I mean, if that doesn't work out and you're on the hook for it, that could spell disaster. So A1 says, everyone look on the bright side. We will all be millionaires if our national budget office says that every 100 days we spend over 1 trillion added to the debt. McDonald's burger, 10,000. Yeah, I mean, the money would have to trickle and be dispersed to everyone for that to happen. Otherwise, you're going to have people who are able to take advantage of that disparity. Where are the American Indians at in the analytical chart? Thanks for sharing. So here's one thing I will also chime in. What I've noticed in a lot of the new construction communities, a lot of these, nicer neighborhoods, most of the neighbors are Indian American. I'm not going to lie. Like, actually, one of my future neighbors I met during a HOA meeting, a virtual HOA meeting, and they basically are doing the whole generational wealth. Generational living, right? And my bad, I think the camera just went out. So let me just fix this real quick. But yeah, basically they're doing multi-generational living in their house. So, they have grandkids, children, aunts, uncles, all living in the same place, right? And so one thing I can say about them is that they practice group economics. Like that's one of the pillars, of, I guess, their community, right? Everyone chipping in, contributing. You have the older generation who's basically, helping to look after some of the kids, and they're all basically working together all under one economic unit. And I think that's the way that it should be, to be honest with you. Sorry, guys, I'm just getting this camera back up. Okay, here we go. All right. So yeah, in terms of that chart, yeah, they're definitely at the top of that chart. they're definitely getting to that bag. All right. Let's see. Why did you stop making videos? I never stopped making videos. I do post a lot on the Patreon, but again, other businesses, family, building a house, so definitely check out the Patreon. We posting a lot there. Let's see. Walla says, how do you become accredited and acquire those pre-IPOs? So basically, the definition, you guys could look this up. There's a couple different definitions of accredited investors, but basically, I believe you have to have like a certain income over a 2-year period. I think it's like 200,000 if you're single, and like 300,000 if you're married. And then I think if you have certain like licenses, you could also be accredited. But they pretty much do what's called like a self-attestation, where you're basically self-certifying that you are an accredited investor. And, sometimes you might have to send documentation, tax returns, things like that. There's a platform that I use called Percent. And so Percent has like a lot of private placement types of deals. And basically, once you get certified with them, they're going to ask you for like your tax returns, your W-2s, or like bank statements. They could also qualify you based off of your net worth as well. So there's a couple different ways to do it, but yeah, being able to get in on the private placements definitely, I think, gives you a leg up. 1 second, guys. I'm going to change cameras really quick because this one is getting kind of hot. But let's go over some other questions in the meantime while I just make this switch. So Kevin says ID was stolen last year and used to open 10 cards, lines of credit. Didn't find out until 2 months ago, and the max utilization inquiries payments tanked to a 340. What do you suggest? Well, I think you have a legitimate case for, identity fraud, if that's the case. And that should be a pretty easy, thing to get rectified, if you're a legitimate victim of identity theft. So that would be my suggestion with that. So definitely check that out. Let's see, you might be you might as well become one because we only live once. All right. I'm not sure what the context of that was, but I am a little late with the comments. So, all right. So let's see. Looking at my credit report is overwhelming. I find it very hard to get a checking account, and getting access to emergency funds seems near impossible. One thing you could check out, I've done videos on a lot of these credit union quick loans, right? You could check out credit union quick loans. I mean, these are great ways for you to get in with no credit check. You're not going to get a huge limit, but it's a start, a way to build a relationship with a financial institution. So I can shoot you the link to that. I did a couple videos on that. All right, so we got Lucky says, that's true. People judge more on appearance than substance. That's true. I mean, when you think about it, even when it comes to, like, I think a lot of times we do this subconsciously, right? Like if you go on YouTube and you see someone, let's say you're just looking at a thumbnail and you see someone who has a lot of subscribers and a lot of views in a short period of time, you're going to click on that video because just based off of, that appearance, okay, this content, this video might have something that's of value. I've seen cases where, a video might have 3 views, but they're dropping some of the most helpful information that you'd ever find on the internet. So again, yeah, appearance definitely, means a lot. Stunner Breeze has been here for 3 years. Banks making record revenue. I think it depends on the bank. The big banks are crushing it because they're consolidating. A lot of the regional banks are actually, or not a lot of them, but a handful of them are actually in trouble because a lot of them have a lot of these commercial loans, right? And so for those who don't know what's going on in that space, basically what happened is during COVID, a lot of work from home at these commercial office spaces. And so pretty much the way the values of those commercial properties are based off of the rental income, right? So when the rental income falls, then the value of that property falls, right? Because they're looking at net operating income, NOI. That's one of the metrics that's used to determine the value of a property, right? And so I guess, pre-COVID, right? A lot of these properties had high valuations because maybe they had a higher occupancy rate. And now because a lot of these office spaces are not being utilized, they're not collecting rents, their values have gone down. And a lot of the regional banks were, servicing a lot of these loans. And so, yeah, I think it's a case by case basis. I wouldn't say just overall. Again, a lot of banks are increasing loan loss reserves, writing off a lot of loans as well. So, yeah, I think that's a case by case basis. I can tell you, like Chase, for example, is crushing it right now. A lot of the big banks, American Express, they're doing really well right now. But I think the banks that cater more to like the subprime customers are struggling. A lot of fintechs have gone out of business. Some of y'all might remember Tally. So Tally recently closed up operations. So this was a fintech company that basically did pretty much like a debt consolidation line of credit where you can refinance your high interest credit cards onto a line of credit. And then for some time it wasn't reporting. So it was helping with like DTI, lowering DTI. But anyways, I think they were around for like 8 years and they raised like hundreds of millions of dollars and they wound up, closing operations. So I know a lot of the fintechs are not doing so well right now. Is Credit Karma worth signing up for or just stick with the FICO scores? I mean, I think it's worth just seeing what's on your credit. It's not going to be as comprehensive, but Credit Karma is free. So there's really no adverse, effect of using it. FICO score, or my FICO is going to give you like your specific FICO score. So if you're doing like a funding round or you just want to know like your specific mortgage scores or FICO 8, FICO 10, FICO 9, if you want to get into those details, then I think my FICO is the best. Now it does cost a little bit more. I think it's like $39.99 a month, but it's not too bad. She says that you'll never catch up with the comments. I'm trying to. Right now I'm at what? Oh, I'm only a couple minutes behind actually. So he says, I saw multi-generational Indian families in Katy, Texas subdivisions, grandma walking with grandkids to school. Yes. As a matter of fact, I learned about this way back in the day. Like one of my best friends from high school, that's basically how their family, so it was Indian and Pakistani, but basically, you had the older, grandma and grandfather who would basically take care of the kids while the parents went to work. The parents, the aunts, uncles, everyone went to work and they all contributed, put back, and they would get these single family houses, might have like 5-6 bedrooms. And that's basically how they got down. And what they would do is every couple of years, they would, stack their money up. They would buy businesses, just increase their economics and then move into an even bigger house. Right. So they just kept doing that. And then maybe rent out the previous house that they had. So yeah, I mean, I think that's the best way to go. Adrian Nicole says, how do I remove a late payment from my credit report? So I'll say this. Removing a late payment is much harder than just moving the account overall. There's goodwill letters, but I'll be honest, like I have not personally ever seen that work where it's like you submit a goodwill letter and then the creditor just takes the payment off. Now, here's one thing I will share with you guys. This is a game changer. Maybe I'll do a separate video for this, but This is one thing I can say that the current administration got correct. So basically, right now there's a grace period on federal student loans. So let's say you owed student loans and you had late payments on them. If you start, so you basically would have to, sign this form. But basically, if you agree to resume making payments, what they're going to do is they're going to change all of the previous late payments to paid as agreed. So this could actually be a way to improve your credit report if you do have, let's say, student loans, which are usually going to be people's longest accounts, right? Like if you're in your 30s and you have student loans from your late teens, early 20s, those trade lines are probably at least 10 years old by now, right? So if you're able to get those payments as paid as agreed, that's just going to boost your credit. Let me see. Maybe I'll do a separate video on that. But to answer your question, removing late payments is hard. I'm not going to lie. You'd probably be better off closing the account and then disputing that account to get it removed. Who should I talk to about credit card fraud? I'm not sure I understand. Did someone so you could actually you could file a FTC report, if you've had legit identity theft. So definitely check them out. Also CFPB. There's a lot of resources for that. What's your opinion of debit cards that report as credit cards to the credit bureaus? I mean, so there's one, I forget the name. I don't think I've ever really reviewed those debit cards. I don't see anything wrong with it for credit building purposes, but a lot of those cards really don't lead to anything unless it's with an actual bank. I forget what card I'm thinking about. Oh, like the extra debit card, right? I think it reports, but they charge you fees for the credit reporting. So, I mean, overall, I'm not a big fan of them, to be honest with you. Also, debit cards where that's a connection to your bank account. So if you have any amount of money and you're out swiping your debit card, that just exposes you. Plus, some of those debit cards don't get purchase protection. Some of them don't earn cash back rewards. So, I mean, there's a lot of benefits of using credit over debit. I would say if you're just looking for an easy trade line to add, I don't see anything terrible with it. Let's see where we at. So correction meant to write, what's your opinion of the debit cards they're reporting? Oh, so consumer finance accounts. I mean, if you go on my FICO, it'll actually tell you if you have too many consumer finance accounts, right? So anything that's non-bank issued, so things like Kickoff, things like, I don't know, Stellarfi, like those are consumer finance accounts. Those accounts are not coming from an actual bank or, an actual depository institution. So even as it affects your FICO, those accounts are actually associated with high risk, right? Because you don't undergo any type of underwriting to get those types of accounts. So like when underwriters see that, basically that's kind of a sign that, okay, you got all these credit builders that don't really do any rigorous underwriting. So it's not a real good way to kind of assess your credit risk with a bunch of consumer finance accounts. And I've been talking about that for years. Like probably the best credit builders are going to be share secured loans and secure credit cards, honestly, over the consumer finance accounts. Hold on, let me go back. So he says, do you think office REITs can ever recover? I think eventually, yeah. A lot of them are being repurposed. Even like a lot of shopping centers and malls, what they're doing now is they'll have like non-retail types of, businesses come in there and, fill in some of the space. So like a lot, you have a lot of these like, child play centers, where, they're popping up a lot at these malls. And I think eventually, yeah. Made six figures during the pandemic, following credit plugs videos, no cap. Absolutely. Absolutely. Congrats on that. Let's see. It's so hard to find a legitimate credit repair company where a client will see real results. Have you ever used a credit repair company? Yeah. So I definitely feel you on that because, before I really knew a lot about credit, I was actually seeking out a lot of like credit repair companies. So I was on YouTube, I was on Instagram, just trial and error. And basically, I would say probably about the fifth credit repair company, they were actually able to get real results. So yeah, like to answer your question, like there's a lot of companies that can deliver results. And the other thing about it too is that, your results may vary. There is no silver bullet when it comes to credit repair, right? You can have an item that gets taken off of two bureaus, but it just sticks to one. And so again, there's no guarantees or assurances. But yeah, I mean, we have a lot of different, companies that we work with, based on your characteristics and, what types of, service you want to do. Right. There's different price points, different price sensitivities. Is, one company better than the other? I think that's going to be based off each individual's experience. But if you check the description of this video, we have a bunch of different companies, that we use. Kevin, you're supposed to get a police report. Yep, exactly. Let's see. New here and your knowledge is good, but tell people the truth, which you doing, but it's almost impossible to fix bad credit. It takes time. No easy glitch way out. So I would say, I think it's people's expectations. Like, if you have 17 derogatory items, you can't really expect to get that wiped off your credit report, in 30 days, right? Like it took you much longer to tarnish your credit. So I would just have the expectation that, hey, it's probably going to take you about at least, 6 months, right? Like don't expect anything to happen before then. But if it does, that's icing on the cake. But I think a lot of times, people go through this cycle of repairing their credit, getting more credit, fumbling that credit, repairing their credit again. And then another thing too, like once you start disputing items like consecutively, a lot of those disputes just become frivolous. Like that's one thing you have to keep in mind. Like if you log on to, let's say Experian, for example, it'll have a history of every time you submitted a dispute to Experian. So if you're just constantly disputing the same thing over and over and over, after a while, it becomes less and less effective. So that's just one thing to keep in mind. And also just have more of a long-term expectation in terms of like, if you do fall on hard times and you can't, fix, you can't repay your debts and you wind up tarnishing your credit, that is going to be a journey to, get back to where you want to be. And I'll say this too, like for years I had, again, as I've told this story plenty of times, these late student loan payments on my credit report. And I had that on my credit report for years, right? So again, it just takes time and patience. Charlie says, one of my friends just went through Cash App card being hacked. Please do not click on the links you do not recognize. They're stealing your private data to gain access to your phone, and then credit. Yeah, I've been seeing a bunch of videos about something Cash App owes you some money or something like that. But yeah, I'm not a huge fan of Cash App. Did you hear about the lawsuits with the bank for deceptive practices where we have to hold a mediation arbitration call for payment settlements like Wells Fargo, Chase, and other banks? Yeah, I actually have heard about that, specifically with Wells Fargo. They've definitely been in the hot water multiple times over the years for, just a lot of weird stuff. So, which do you think is more effective for credit building, secured cards or secured personal loans? Now, this isn't a matter of like which is better. I think you can use both because, again, one is revolving, one is installment. So you want to have credit mix. But if I were to say like which might be slightly more effective, I would have to go with the secure personal loans, because installment loans will show a fixed payment over a period of time. Whereas, for example, a credit card is only going to show your balance. It's only going to report your balances if you have a balance at all. So let's say you have a credit card or a secure credit card and, you put your deposit down, but you're not actually using that card. Then, I mean, sometimes those cards could be marked as, what do you call it? Dormant accounts, right? So you still have to actively use a credit card or a secure personal card to get those payments reported. Now, if anyone's looked at or logged into their Experian account, Experian now will report, like they basically give you like a month by month description now of what your balance was and what your payment was. So like I pulled up mine the other day, and of course I have a lot of like dormant, personal credit cards because obviously I don't use all of them. And that's something we don't really think about because we think, okay, we just keep the balance zero and it just, reports on our credit. But if you have accounts that are dormant, it's not adding those payments to your credit report, right? When you look at your detailed report and you see, okay, it's just zero balance, zero due, zero payment. You actually want to show that you're making these payments over time. So for that reason, to answer your question, I would say secured personal loans might be slightly more effective. But again, it depends on what you're talking about. Like a secure personal loan might be more impactful for your mortgage scores versus for your bank card scores, because those two FICO models weight different types of accounts differently. But overall, I don't think it's one or the other. I think it's both. So if you're starting out, I would definitely recommend both. Now, I would let's say if you were starting from scratch, I would get more of the secure credit cards that graduate. So when they graduate, you get your deposit back and you get a credit limit increase, right? And you get to keep the card. I would get more of the revolving credit cards versus, getting a bunch of personal installment loans. The reason why is because even the installment loans, if you get too many of them, it can increase your DTI. So that's just something to keep in mind. Charlie says, I learned a lot. My credit knowledge, I appreciate that. Thanks for responding. Just sub for you. Honestly, real talk. Took 2 years to get to a 780. Congratulations on that. And I appreciate the sub. I heard it's never a good idea to pay collections in full because the collection agency paid pennies on the dollar to secure the debt. That's actually true. I mean, once it goes to collections, I mean, paying it off generally is not going to help your credit. Now, you will satisfy the debt, but, it doesn't usually automatically help your credit. Now, there's what's called pay for deletion. That was a thing at one point, but again, seldom see that type of thing work. So yeah, you're absolutely correct. So it says pay the company directly, not the agency. Okay, so what app you use to highlight live stream chats is dope. So I use a software called StreamYard. So StreamYard is, I guess, one of the well-known streaming platforms. Credit is rough. I've been battling on my report for the last year. They won't remove. Luckily, next year will be the 7th. Yeah, I mean, I've actually had a situation where I just had to wait it out. If you're around like 6 years and 8 months, I mean, you can keep trying to dispute it, but you only have a short time before it should naturally fall off. And sometimes it doesn't always happen. You still have to dispute it, but once it's past that 7 years, it's usually really easy to get off your credit. Have you ever used so-called catalog credit card companies before? I've heard of Fingerhut, Swiss and Colony. No, I would stay away from those types of companies because nowadays there's so many different ways of building your credit. Those are going to charge you fees. They're going to overprice the products that you can buy from them. They're going to charge you a setup fee, a monthly maintenance fee. Those are just extremely predatory types of credit accounts. I would just stay away entirely. Do you agree Apple Federal Credit Union is now bigger than Navy Federal? By bigger, I mean, it's technically not bigger in terms of a financial institution. But what I will say is that a lot of people have been jumping onto Apple Federal Credit Union lately. Now, I've actually went to a branch. So Apple FCU, Apple Federal FCU is based out here in Northern Virginia, as a matter of fact. And if I remember, I think it was designed for like teachers, which is, I guess, where the name comes from. Like, teachers get apples, right? But yeah, they have a lot of good products. I did speak with a rep once, and I know for a certain period they had stopped accepting out-of-state apps because of a lot of fraud was going on. But no, they're not bigger than Navy Federal. I don't think any credit union will ever get on Navy's level in terms of like the number of branches, number of members, total number of assets. The only credit union I think that might possibly come close, and it's still far away, would be either PenFed or SECU, State Employees Credit Union, because they combine all of the different ones: PSECU, SECU Maryland, SECU North Carolina, Washington SECU. So, if you join all those together, maybe you'll get to that point. All right. Why does this camera keep going out? All right. So let's go to the next one. I think my camera keeps overheating, guys. But so chat, he's talking real things. Take notes. If the language is over your head, I get it, but please make sure we get it. He's on another level, very smart and not scamming. I appreciate that. Next one. I'm a joint owner on a car that my brother crashed without insurance, and I can't get it off my credit. Help me. So I'm a joint. Oh, were you a co-signer? So here's the thing about that. As a joint owner, I mean, you're both on the hook. So that's basically the whole thing about, when you're doing your finances and co-signing, you should never co-sign, even if it's a close family member, right? Because their actions can definitely have an effect on, what you have going on. So I guess, you could try to dispute the item, but the thing with being a joint account holder is that you're pretty much equally liable for the debt on that vehicle. So yeah, that's kind of the tough part, I would say, about being a joint account holder, right? You're still going to be on the hook for the debt. So yeah, I think the best thing you can do is try to dispute it. All right, next question. And sorry, guys, I'm just switching cameras right now. I'm curious, the same or similar strategies used to help credit repair. Would you use the same methods applied to check systems report? Not necessarily. I know check systems is a little bit different. Yeah, I've never really had a lot of success with disputing check systems. It's slightly different, right? So for those who don't know, check systems is basically like it checks your relationships and demand deposit accounts at different financial institutions. So it's slightly different process, and sometimes with check systems, it doesn't mean that you had a bad relationship. Sometimes with check systems, they'll see, okay, how many new accounts have you opened up? How many checking accounts have you opened up? So sometimes it's not always about if you overdrafted on an account or anything like that. So yeah, check systems, I'm not 100% sure, but you could always pull your check systems report. Sorry guys, we have my backup camera because I think we've been on almost 2 hours, so I think it overheated. But yeah, I mean, I would just go pull a copy, see what's on there. Sometimes you just have to let your check systems cool off. Now, I remember we did a lot of credit union reviews, and people would literally apply for every single video, we put out. And so, if you have a bunch of, if you just have a bunch of check systems inquiry, like in a short period of time, that's just seen as unusual and usually like a proxy for fraud. Now, I've seen cases where like people with 800 credit scores get denied entry into a credit union because they have too many check systems inquiries. And there's actually a specific code for that. It's called unique FIDDA. So too many unique financial institution demand deposit accounts. So with credit unions, you have to open up a savings account usually to secure your account. So if, we do a video like, look, you can go to, Justice Federal, Langley, NASA, like, you're going to get all these check system inquiries. The thing about it, you're not going to see them in the same way that you see credit inquiries, because usually you'll get an alert. When you get a check system inquiry, I don't think they have any like credit monitoring where you can see it in real time. So if you're just opening up all these credit union accounts, you may not know that you're getting a bunch of inquiries, on those accounts. So I think Trump will find a way to even the credit/business field for everyone, and the best will have to prove themselves worthy. Sure. I'm not 100% sure. So we'll see. Jason Rubin says, what happened to Tomo? That's a great question. What did happen to Tomo? So I actually was using Tomo a lot. So for those who don't know, what Tomo would do is if you refer someone to Tomo, like let's say you get a Tomo card originally, every person you referred, they would increase your cash back by 1% up to 20%. So like at one point, I'm getting 20% cash back on everything. But it's I think it was up to like $2,500 in spend per month. So if you think about it, that if you're maxing that out, that's $500 a month that you're getting in cash back. So I'm not going to lie. Like I would go to, Harris Teeter and buy Visa gift cards, because when you're at the grocery store, any purchases is going to be coded as grocery. So it's not going to be coded as anything else. So you would get I'll get the 20%. So let's say I bought $500 worth of gift cards. That's 20% cash. So that's $100 minus, I think they charge like a $6.95 fee. So you're still like coming out ahead, pretty much. I think like $93 or something like that. Pretty much manufacturing spend. But now they've pivoted to where they have like this, I guess they kind of copied, what's the other company? I'm drawing a blank. You have a $30,000 up to a $30,000 trade line. I don't know why they pivoted so hard, but a lot of people are not feeling that. They canceled everyone's cards, and I don't even think it's reporting on their credit. So like that was just a huge pivot with no explanation. And honestly, it's kind of a weird user experience now. I don't know if anyone's really talking about Tomo right now. So yeah. So here's the other thing too. Like a lot of fintechs the business model wasn't sustainable because, again, a lot of the fintechs have easier underwriting. And then, the way these companies make money usually is going to be through the credit card interchange revenue share. So for those who don't know what that is, every time you swipe a credit card, for example, let's say you go to the grocery store, you spend $100. The merchant is not getting that full 100 that you spent. They might get $97. That $3 fee is usually going to get split between the credit card issuer and the payment network. So let's say, for example, you use your Navy Federal Platinum card, right? Which is a Visa card. So usually, like, if you've ever seen, like, when you're, let's say, accepting credit cards, right? It'll be like the 2.9% plus a 5-cent fee, right? So that 2.9% goes to the credit card issuer. That 5 plus 5 cents goes to the payment network. So that's either going to be usually Visa or MasterCard, or if it's a co-branded Amex card and Discover. So like Discover and Amex are both underwriters, credit card issuers, and payment networks themselves. So that's basically how a lot of these fintechs work. Like, they split the credit card interchange with their sponsor banks. But the problem that a lot of these fintechs had was that, especially on the consumer side, is that, as well as on the business side, is that a lot of the customers were not spending enough money to really justify, the cost of acquisition, for that customer, right? So they might spend a certain amount of money to acquire a customer. So they're anticipating on the back end. So the lifetime value of that customer is going to exceed whatever the cost was to acquire them. But all it takes is like a couple of defaults to wipe away all the revenue from hundreds of customers who they're generating revenue from swipe fees, pretty much, right? These interchange fees. So the economics behind a lot of these fintechs just didn't pan out. And that's why we saw like a pivot from like Corpay, MasterCard did it, Brex did it, Ro did it, where instead of focus, and even Divvy for that matter did it temporarily, right? And they basically did a pivot from, let's say, startups or higher risk businesses to more established businesses that had higher spend, because the more spend that you have is the more interchange fees they're going to have. Some of y'all remember the Divvy credit builder, right? So like what they found, and again, I'm giving you guys just some insights. They found that a lot of people who got those cards really weren't spending on them, right? Like they got it just because, it reported to their credit or to their business credit, but they weren't, it didn't offer, great rewards, benefits, stuff like that. So the reason why some of these products are successful, some are not, for example, like a good example is American Express. The reason why they're so successful is because they have a lot of different card products based on the types of spend. So if you have a dining card, an airline card, a hotel card, a travel card, whatever, office supply card, so it's almost incentivizing the user to use a specific type of card for a specific type of spend. And so they're able to like maximize their swipe fees that way, right? And also with these welcome bonuses. So they're making money on the back end with those swipe fees, right? But what Tomo did was just, I don't know, I think they probably realized that their business model wasn't working and just did a complete pivot. And again, I'm not so sure what they're doing right now, and it seems a little bit weird. But so, TransUnion report late payments for 4 years now. All right, let's see. And I'm sorry to skip some of these questions. Let's see. Have you ever heard of other credit bureaus like SageStream, LexisNexis? Yes. No, let me tell you guys about LexisNexis. All right. LexisNexis is probably the most comprehensive consumer credit reporting agency. I would urge everyone to just go pull their report. I pulled my report. My report was like 93 pages. Like it has literally every name variation that's ever been associated with you. It has addresses that go, way back. It has any insurance claims, accidents you've been in, traffic violations. Like it's almost scary the amount of information that LexisNexis has. And so what they're doing now, what a lot of mortgage lenders are doing now is that they're pulling LexisNexis and they have what's called a fraud intelligence report. So I always tell people like, if you're trying to do any type of big financing, SBA loan, a mortgage, a construction loan, anything like that, they're going to pull LexisNexis. So like I see a lot of times when people are like, oh, I'm just going to get a CPN and, get all this funding and buy houses and stuff like that. The LexisNexis fraud intelligence report basically will uncover anything that does not check out. Like if you, just to kind of keep it simple, like if any information does not check out, it will come to light in that report. I'll just leave it at that. So yes, I've heard of those. LexisNexis is probably one of the most, if not the most important one, because it just has so much information. Can I send this as a link to friends struggling with your teaching if it's okay? Yeah, absolutely. Feel free to share any content that I have. I appreciate that. Great question, Tomo. Yeah, I don't know what happened to it. It was a great product, but yeah, I mean, they've reached out to me a couple times, but I'm just as confused as the rest of you. My Tomo account is in limbo. It's been open, but it's like I can't use it. So anyways, so for those who don't know, like the Tomo credit card literally does not exist anymore. Right now they have like some weird, they basically copied Stellarfi, that $30,000 consumer finance account essentially. So, and again, I'm not knocking it or anything like that, but there was really no sort of explanation. They just kind of made this huge pivot and yeah, it's like a completely different business model. So I just have the department stores card to help build credit, Macy's, Kohl's. So here's the thing about department store cards, right? So department store cards are not necessarily consumer finance accounts. Some people think that if you have let's say a store card, let's say a Target card or a Walmart card, those cards are actually bank issued because you have a major bank on the back end. So like a Target Red card, you have TD Bank behind them. Walmart card, I believe it's Capital One behind them. A lot of these store cards have Synchrony Bank. So even though it's branded as kind of like a non-bank, issued card, it's still a co-branded card. So it still counts, in terms of bank issued. So those are still good cards to have. Tomo was working for me too. They caught up perhaps. Yeah, I'm not sure what the deal is with Tomo, but it had promise. I mean, I think so. It's funny. I think one of the first videos that I ever did that did somewhat well, I guess just in my terms, was the Tomo card back in like 2020, because I think they were one of the first accounts that used Plaid instead of looking at your credit to qualify you. So I mean, it had a lot of promise, but I'm not sure what happened there, to be honest with you. Whatever happened to shopping cart trick with Community Bank, Kings? Yeah, that's a good question. So some of you might remember I did a review on a couple shopping cart tricks. You had Overstock. You had, what else you had? You had the Sportsman Guide Visa. I mean, there was a lot. There was the Caesars Visa card. There was a handful. So it was basically, yeah, Community Bank issued accounts. There's also Good Sam, I believe. And again, I haven't checked or tried these in like a long time, but yeah, the shopping cart trick was basically like a way for you to be able to get a card or get a pre-approval without taking on a hard pull. I'm not sure if those work anymore. Honestly, I've not tried them. Like a lot of times what you'd have to do is like completely wipe out your browsing history, open up an incognito window, go to the website, create an account, log into the account, add a couple items to the shopping cart, and then if you did that sequence correctly, then sometimes it might pop up, like if you're lucky. I literally did a walkthrough of Sportsman Guide Visa, which I think I got. I don't even use that card, but I think I have like a $9,500 limit on it. But yeah, I mean, that was definitely a good play. I'm not sure if it's still working though. I had to learn what he's teaching the super hard way. Thank you, man. You're really teaching my opinion. I appreciate that. That's what basically what I'm trying to do is, reduce the learning curve. Like it took me, I just checked my credit report. Like I have 18 years of credit history, in my mid 30s. So, a lot of that was through trial and error. Well, he's giving us free economics class that we get for free. So put your people on here. Yeah, no, I appreciate it. I definitely appreciate it. Is pre-approval the same as pre-qualified? No, it's not. There's actually someone did a really good video explanation about this. I think Cal Barton may have done a video about like the differences with like pre-approval, pre-selected, pre-qualified. Different issuers might even have a different interpretation. I mean, there's sometimes you can get pre-approved and still get denied. I think it just varies based off of each institution, but I never really put much stock into pre-qualified, right? Pre-qualified means absolutely nothing. Pre-approval could mean that some type of, maybe it was a soft pull that was, part of the underwriting. But again, I would take that with a grain of salt. Like you even have like, I get these Chase pre-selected invitations, like probably on a weekly basis, right? And I already have like a Chase card. So sometimes I don't think they're actually looping back to your credit. A lot of the pre-qualified or pre-selected are just marketing. It doesn't really mean that you're going to get approved. And another thing about this too, the verbiage is important because some of you might remember Credit Karma got into trouble for this. There was actually a class action lawsuit against Credit Karma because they would have all of these credit recommendations where it's like, oh, you have a high chance of approval and you apply and you get denied, right? So a lot of people ask me like, how solid are those Credit Karma recommendations? I always tell people like, they basically are just recommending the cards to the advertisers to pay them the most, right? That's the cards they're going to be pushing as high chance of approval, things like that. So it doesn't always loop back. And another thing about, they don't cross-reference like your credit report either, because Credit Karma will recommend cards to me that I already have. Like it'll say, you have fair odds of getting approved for, a American Express Gold card. And it's like, I've had that card forever. So there's no type of, I don't think they're actually like running your credit against their decision engines, for their underwriting systems. I don't think that's going on, but apparently, and I haven't like tested this out, but Credit Karma will pay you. So like now they have it where it's like, I forget the verbiage, but pretty much they have it where if you get denied, if they recommend something that you have like high approval odds for, or pre-approved and you get denied, they'll pay you $50. I'm not sure if anyone's ever, utilized that, but that's just something. Sorry, I think I missed one. Charlie says Walmart parted with Capital One. That's right. You're absolutely right. It's weird though, because a while back, I never go to Walmart, by the way, but like, I needed something that was only at Walmart. So I went there and I still saw like the advertisements like in the store to apply for the the Walmart Capital One credit card. So I don't know if it officially, like, I don't know if they're still accepting new applications or if for people who have the existing card. Now, they did discontinue the Walmart business card. So for those who are aware, I did a video on this. I actually did get the Walmart business card, which I believe was through, I can't remember if it was through, I think it was through Synchrony Bank. And maybe the personal was through, the personal might have been through Capital One. I'm not, as a matter of fact, no, I take that back. The business account was through Capital One too. And I remember I logged in one day and it just said 0 available credit. So, yeah, I'm trying to get through them. So who we got? So when applying for business credit cards with PG, is there a way to apply for multiple cards without multiple hard pulls, like when you are shopping for a mortgage? So here's the thing with that, right? I've tested this out, a couple of times. So like, there's this whole idea that if you open up a bunch of different browsers and hit the submit button at the same time, that hopefully you can pull the same exact credit report for each of those applications. Now, I've actually done that one time before, right? But I think you can only really do that with 2 applications. Like if you try to do that with 3 or 4 or 5 applications, it's not going to work, because by the time that third application, by the time they query the credit reporting agency and hard pull you, that first inquiry is going to be visible, because it only takes a couple of seconds for the inquiry to post to your credit report. All right. So you have literally probably like a less than a 5-second window to like execute that where they're pulling identical reports. Right. So there is double dipping at certain institutions. Like you could double dip with Chase for 2 business credit cards on the same day. Like that's possible. We have clients that do that. So yeah, double dipping. But if you're trying like different, like you could double dip in the same institution. If you're trying to basically, I guess somehow like apply all at once and then like have the same report being pulled for all those applications, I think you're pushing it a little bit if you try that. I was able to do that several years ago. I did it. So I did it with 3 applications. The first 2 pull the identical report, but the third one saw the inquiry from the first one. So like, yeah, the more apps, the more complexity you add to it, is just going to be harder. Absolutely. I appreciate answering any questions. We got, Mr. David Rainwater, what's going on? Hope everything is well. Have you ever networked with other credit YouTube channel experts, share ideas and insights? Absolutely. Definitely have with a handful. And it's funny, it's actually a pretty small circle, at least in the finance space. So yeah. I mean, we've definitely done collabs, and I've also talked to people just offline, not necessarily publicly, but yeah, I've had conversations with a lot of people offline, and we actually have some interviews in a pipeline as well. I'm not going to spill the beans on that, but you guys will definitely see some huge collaborations in the next couple of months. Okay, so we have what is it? Chase is my choice these days. Any suggestions off the top for real estate investors, LLC, no proof of income, business loans, 100K? Gosh. So real estate so LLC, so no proof of income, business loans. So do you mean for like DSCR loans, or just unsecured business loans? So I mean, so here's the thing with loans, right? Like most loans are either going to require, like if you're trying to get cash, you're going to have to show some type of, either a profit and loss statement, bank statement, or tax returns. Not necessarily all three, but most times when you want cash, you have to be able to prove that you could service the debt, right? So banks want to see that you're generating money to repay them. Credit cards is a little bit different, where you can get it with no proof of income, no docs, things like that, just based off your credit. But not off the top of my head. Now, if you're looking for real estate financing, right? One that I really highly recommend, I'll drop this one to you guys. Let me share this one. So if you're looking for real estate loans, I would like DSCR loans. I would check out Kiavi. Kiavi. All right, so this is probably like one of the best ones for, let's say, DSCR rentals, portfolios, fix and flips, bridge, construction. They're pretty much everywhere, in most states. Another one you could check out is ACC Mortgage. So like Kiavi only does like non-owner occupied. But then you also have like ACC Mortgage, which is certified by the U.S. Treasury. So this is a certified CDFI. And, they have a bunch of different, programs. So they have a bank statement program, foreign national program, second chance program. A lot of these you can get approved with, low FICOs. And they even have, again, no income verification, investment property loans, financing for investors. This one is actually a game changer, but I would check out like the map to see like what state that you're trying to invest in to make sure that they are licensed there. But yeah, I would say like the big states. I mean, a lot of these like up here, they don't have. I don't know if that answers your question. If you're looking more for like business loans that with no docs, 100K plus, not really. I'm gonna be honest with you. And again, going forward, I'm urging people to have their paperwork together. You want to have a profit and loss statement if you're doing business. You're going to want to have bank statements. And if you've been in business long enough, at least if you've been in business for 2 or 3 years, like you should have at least, some type of tax document. Walmart, the only one competing with Amazon. Yeah, I mean, you have two of the largest companies. Just putting a higher deposit on a secured card help credit score become higher. Yeah, because a higher limit is going to give you more available credit, and you're going to have a better comparable. So let's say if you apply for another credit card, a $5,000 secure credit card is going to have a little bit more weight than a $300 secure credit card. Hard money lenders to purchase real estate. I mean, there's literally so many. There's Lima One, there's ACC Mortgage, All Credit Considered Mortgage. Kiavi is one of them. Lend Simply. There's literally so many. And here I'm gonna drop a gem on you guys real quick. So one way that you could find out about these private lenders. Let me give y'all some game real quick. Nope. Oh, okay. Hold on one second. Oh, here we go. Sorry, one second. Damn, why can't I find this? I might have to do a separate video on this. I'm forgetting. But let me actually give you a couple, right? There's literally so many out here. So you have Lima One. Again, this is, they're a big player in the space. Again, I said Kiavi. Okay. This is one I want to show you. The private lender. Oh, wait. National private lender. Okay, so here we go. National Private Lenders Association. So basically, this organization right here, I don't know if you guys can see. Hold on, let me just take this off the screen real quick. Google National Private Lenders Association, right? So if you go here, you can look at the members who are part of this, right? I don't know if you guys can see this, right? So all these companies are particularly in the private real estate. Again, I was talking about Lima One, RCN Capital. This is another one that I broker DSCR loans with. Global Integrity Finance. Some of these offer warehouse credit facilities. So like, I mean, this is probably outside the context of this live, but if you want to be able to, let's say, originate loans, some of these are warehouse facility providers. So pretty much you can get, let's say, a $10 million warehouse line, go out and originate loans and, things like that. But again, all these companies you can check out. It's called the National Private Lenders Association. These are like the biggest, companies in the space. So you could check these out. I mean, they have a ton of different companies out here. So yeah, definitely check that out. Let's see where we at. In my experience, I got 4 Chase and my limit lowest is 35 G's. My overall credit is 2 million, but don't use it. I got my score by buying gas. He will tell you. Well, congrats on the 2 million. I mean, that's major. What is this? Yo, plug. Does inquiry removers really work? I don't want to get scammed. Inquiry removers does actually work. I'm not going to lie. Like, I've personally used them. Yeah, I know the CEO, the owner of the company. They definitely work 100%. And the thing about them is that they're not going to bill you until after the inquiry gets taken off. So like, what will happen is they will contact you and then just verify the inquiry was removed. So either through Identity IQ or whatever your credit monitoring. So no, they're 100%. I definitely recommend inquiry removers. Just curious, what happened to Glendon Cameron? I'm not sure. I know a couple months ago he was posting some videos. I'm not sure if I know he was talking about like creating a separate channel that wasn't tied to all his other channels to kind of just build a organic audience again. But again, I don't have specific details. But no, shout out to Uncle G though. Hope to see him back soon. Okay, may have to combat that statement. Pulled off 5 credit cards in a try with multiple browsers in 2022. Well, congrats. Let's see. So where are we at? Are there any American Express cards that allow monthly payments instead of paying the debt in full per month? Yeah. I mean, Amex has revolvers and pay in full cards. So you could basically, so like all the charge cards are pay in full, the gold, the green, the platinum, the black card, those are all pay in full. But then you have, the Amex Everyday, Blue Cash Preferred, Blue Business, all of those are revolving cards. The Amazon Amex, all those are revolving. So, and then Amex also has these like promotional, like they'll offer for like the platinum card, like a 6-month, 9.99% APR. So it's almost kind of like it's not a true charge card, so to speak, where you have to pay the full balance. It's not always that case. I would say it's more like a hybrid, like, it does have some revolving features to it. So let's see. So can you drop some knowledge on how your inheritance don't get robbed if you set up a trust? Um, Honestly, I'm not qualified to really speak on that because I'm not 100% sure. Um, but maybe I'll get somebody on that knows a little bit more about trust. That's just not my area. In your opinion, is it easier to qualify for credit with a bank or a credit union? Um, if you're eligible to join the credit union for sure. But a lot of times credit unions can be restrictive. But in terms of credit, I would say the credit unions are usually going to have slightly lower standards. But again, there's like these anomalies like First Tech where, you know, I don't know what they're looking for. Like, so in general, credit unions are going to be easier. What are the best transfer convert crypto into cash out issues? Which banks are the best to transfer convert crypto into cash without issues? I'm not sure. I'd have to look into that. Yeah, I'd have to look into that. Can't say off the top of my head. Navy Federal has their 250, 500 pledge loans. Yes, the Navy Federal pledge loan is probably one of the best. Have you ever used these so-called overdraft line accounts? Usually it's a credit line attached to a checking account used for overdraft protection. Yeah, I mean, a lot of here's something too. The credit unions have what's called convenience pay. So literally, like you can go into the negative on your checking account, and with the convenience pay, basically they'll cover it. And sometimes they'll charge you a fee if you do go under it. But I think it's just more or less like a lifeline in case your account goes below. But certain institutions will combine the overdraft line of credit with a traditional line of credit, so it's almost used kind of as the same product. I actually would prefer when institutions have a separate overdraft line of credit and a separate personal line of credit. But yeah, I've definitely. I mean, I obviously don't use them, but I do have a couple accounts where they have a overdraft line attached to it. Have you noticed a lot of these pay later service like Affirm, Klarna, Afterpay have stopped accepting Capital One cards as payments? Something must be negative with their contract agreement. I'm not aware specifically of that issue. So no, I'm not. That's the first that I'm actually hearing of that. So Jason Garcia says, thank you for the lender examples. My wife's a real estate agent. Our plan is to borrow chunks of money, buy fixer uppers, rent them out, then refinance out any and pay the original lender off. I mean, that's the Burr strategy, like buy, renovate, rent, refinance, right? And repeat, I think. So yeah, no, I mean, I think that's a good strategy. Recently, we bought a home improvement loan from Navy Federal and bought a small condo, currently remodeling at the moment. Now, here's actually, no, I'm not even going to go there. But here's some. Actually, no, I'm not even going to go there in today's video. But there is a Navy Federal hack to get a huge limit. Some of you may already know this, but I'll probably do a separate video about it. 2 rentals so far, would like to move, increase volume ASAP. Yeah, I mean, you could also check out a DSCR loan. Those are really easy to qualify for, usually 20% down. So they'll do like 80% LTV, a loan to value. There's a ton of those right now. So that's one route that you can go. A question, any business funding available for existing business that haven't generated income due to one trying to buy into a business generating income? Yeah, I mean, there's absolutely a lot of business funding for businesses that have not generated income. The only caveat is that you're going to have to personally guarantee that in most cases. You have like the Sam's Club MasterCard. There's certain fintech cards that do give out, limits based off of, let's say, how long you've had your checking account open. You have ones like FinFair. You're not going to get a high limit. Um, Novo also has I think like a MCA type of product that you can get based off your banking transactions. But in general, like unsecured funds with no revenue, that's usually going to be harder to come by. I mean, um, you're going to need a couple data points. Either you're going to have good credit, personal credit, you're going to have some type of banking activity in your business checking account, business credit to a certain degree, but business credit by itself is not getting you unsecured loans. And then you could also use collateral. So one or more of those data points, particularly when it comes to like just cash, you're either going to need some type of cash flow, profit and loss statement, tax returns, things like that. Let's see where we at. Any suggestion on improving cash flow via requesting specific monthly payment dates? Yeah, I mean, absolutely. I mean, you basically, let's say, you can, I guess, reset your payment due dates around possibly when you're getting your paycheck, right? And maybe have it to where, you have the most runway or the most time before you have to pay back, those, credit cards or whatever your payment dates are, right? So here's a hack that I talk about. It's not really a hack, but what I still kind of do is, I leverage multiple different credit products to have more runway, right? To have a higher average daily balance in the checking account. And the way that I do that, I'll transact with credit cards, for example. So, let those, run up, for, let's say, 2 months. And then what I'll do is I'll use a BLOC, a business line of credit, to pay off the credit cards, right? So it's basically, transferring it for, the debt from the credit cards goes to the business line of credit. And so that might give me 3 months where I'm not really paying anything out of my actual operating account. So any money that I'm making is just flowing into the account. And so I've actually used that strategy to get approvals because, I'm getting a higher average daily balance if I'm extending my runway of when I'm repaying my debts, right? So if I have 90 days until I have to pay something off, that means in that meantime, I'm accumulating more deposits into my bank versus if I'm just paying everything out of my bank account immediately, it's not going to look as good because, the balance is going to fluctuate more instead of just kind of, going up steadily. And then, obviously when I do have to pay off the line of credit, I'll just transfer from the checking account to the line of credit to pay it off. But yeah, there are some strategies I talk about where you can extend your runway a little bit, preserve your capital. And it just looks better, when banks look at or underwriters look at your bank statement and they see, your average daily balance trending upwards. Most of the times when you apply for, business funding or certain types of funding, what do they ask you for? They ask you for 3 months of bank statements, right? So if you're able to demonstrate, that you have a high average daily balance over that, last 3 months, it's just going to look more favorable to you. And another thing I also would say is that if you are a business owner, just have at least two different accounts. You have one, which would be more like an operating account. The way I have it set up, I have an account for inflows and outflows, right? So the outflows would be to pay off different bills, credit cards, things like that. And then you have inflows, which, let's say if I'm receiving client invoices or, Stripe accounts, Square invoices, whatever, that's just going into one account as well. So just to kind of keep things segmented. I think that was a question. Chat just saying this guy's amazing. He didn't lie, kept it real about the trusting. I appreciate that. Definitely appreciate that. Man, we're going on 2 hours and 43 minutes. So have you ever heard of M&T Bank, U.S. Alliance Credit Union? Yeah, absolutely. I've done videos on them. I'm a huge fan of M&T. So M&T Bank, I'll give you some data points real quick on M&T Bank. So they're more East Coast. Right now, they're trying to compete with the Truists and the PNCs and things like that. So right now, I did a video. I think it's on my main page. When you go on my channel, I think that's the video. I shared some data points on a application that I did almost like a year ago, or last like October, September, on the business side. So they're going to pull Experian. They're a relationship type of bank. So you do, for like business products, you definitely do need like a checking account with them first. And they have pretty good rates right now. The rate on their BLOC is prime +2. So the prime rates right now is 8.5. So 10.5, on the line of credit, not too bad in the current environment. I think once rates go down, obviously they're gonna that line of credit is going to be even cheaper. So yeah, good things about M&T. And then U.S. Alliance is that's another credit union. You could do a pre-qualification for them. They're open to anyone. So that's one where there's no geographic restrictions. I don't actually have an account with U.S. Alliance, but I have done videos on them. Thoughts on the best ways to get new real estate into your REIT? Thoughts on the best ways to get new real estate into your real estate investment trust. I mean, I don't think that process is that difficult. You might want to consult like a real estate attorney, or maybe even a title company, to be honest with you. Capital One began issuing their own Klarna Pay Later service. I believe you got a heads up about that. Now, here's one thing about Capital One. So a lot of that Capital One is in discussions right now with a merger with Discover, right? So Capital One is supposedly in, I guess, negotiations. I believe they may be before like some type of antitrust investigation, right? So Capital One has definitely been looking to consolidate a lot of their operations. So the whole thing with Discover is to basically cut out Visa and MasterCard, which issues their cards currently. So for those who don't know, Discover is not only a credit card issuer, but also a payment network. So the only two companies that I'm aware of that is a credit card issuer and a payment network is American Express and Discover. So basically, if Capital One were to acquire Discover, all the cards would have the Discover payment network. It would just make sense since they would be vertically integrated. So with regard to Capital One, I think that's just the approach they're taking now. They're probably just trying to integrate everything. And when you think about it, going back to like the integration of the Discover payment network, I told you earlier, when you swipe your card, whatever fee those merchants are paying, part of it goes to the credit card issuer and part of it goes to the payment network. So let's say when you use an Amex credit card at a store, Amex is getting paid in two ways. They're already the payment network and they're the credit card issuer. So pretty much if Capital One was to acquire Discover, they would be cutting out Visa and MasterCard. So they wouldn't have to pay that, whatever, 5 cents every transaction to Visa and MasterCard. So you think about it, if they're doing billions of transactions every year, you multiply that by 5 cents every transaction, you're talking about tens, maybe hundreds of millions of dollars that they're going to be saving just by being vertically integrated, and probably within like a year, right? I don't know how many transactions they're doing, but likely hundreds of millions, so like, or even maybe billions. I'm not sure, but that's just a consolidation move, I think, with regard to Capital One. I think they're just trying to bring everything in house. Share the Navy Federal hack now. This is an intimate audience. You see, the thing with Navy Federal, man, like, so here's why I'll share it on the Patreon, because I don't want to put it on YouTube, because things get on YouTube and before you know it, it is no longer a hack. So no, I'm not going to do that. And here's the thing y'all got to understand too, like, whenever we put out information now, and at least on YouTube, there's just a short time window before, something happens where, it's no longer a good move. So I probably will do it on Patreon. Teasing with the Navy Federal hack. I prefer business models to buy cash at a discount. I mean, it's probably something a lot of people already know, or maybe they don't, but yeah, it's just Navy Federal is just a sensitive topic. Have you ever been approved for so-called unlimited or preset limit card? Yeah, so like the platinum card, gold card, yeah, those are all no preset limits, but I mean there actually is a limit, but it fluctuates. That's why they say no preset, because it's a variable limit. Like, it can change based off of your spending habits, based off of your repayment habits, based off of your overall relationship with Amex. So yeah, it's technically not unlimited, but like a lot of people are able to build up high limits with Amex based off of their spending. Damn, man, you either went to economic school or you're like dropping like. So yeah, no, I was a econ major, so that might make sense. Let's see. I began wholesaling real estate, flipping it, and I was like, I'm loving this other side hustle. Yeah, I mean, real estate is definitely a good business model to get into. Chad, appreciate learning this. Very intelligent from the way. All right, so let me see. Fintech companies will eat up all that cash flow. I got to give it to you. You know what's up. My hat's off to you for teaching people. I appreciate that. David Rainwater says labor force participation rate, Jim, bro. Thanks. Yeah, like I said, the labor force participation rate. I mean, you guys could look up the definition, but basically, it's like the percentage of able-bodied, working age people who are actually gainfully employed. Like that's the way I interpret it, right? So if and again, it's not counting people who are disabled, things like that. If you're young, too young to work or too old to work, it's basically like, working aged, people who could work, what percentage. And I think it's at like 62% or something like that. Which you think about it, there's just a lot of like unproductive adults, who are just not working. Yeah, have a Navy Federal Go business card. Here's one thing about Navy Federal business card. I honestly think on the business side, Navy Federal is way overrated. Like, from my understanding, they don't even have a unsecured business line of credit. And if I'm wrong on that, I apologize. Somebody correct me in the comment section. But does Navy Federal, from my understanding, does not have an unsecured line of credit. And their Go business card is just, what does it give you? 1% cash back? I mean, I guess the benefit of the Navy Federal business card, though, is that it's like a hidden trade line, because it doesn't report on your personal and it doesn't report on your business. So it's kind of like a ghost account. So that there are benefits. Now, there's like certain credit cards, for example, on the business side that will report to your business Experian, and if you have a high utilization, that could lower your business credit score. But from my understanding, most credit union business credit accounts do not report. I have a line of credit and a credit card with CQ on the business side, and I know for a fact that they don't report. At least they don't report to Experian Business. And I don't think they report to PayNet either. So there is some advantages with some of those types of accounts. Let me see. Are personal debt consolidation loans a good idea? Yes, if you're going to save interest. So if you have like high interest loans or credit card debt and you can get into a lower interest, or maybe even extend the term out so that you have a lower payment. I usually would say, like, for example, a lot of the debt consolidation companies, they have a minimum threshold in terms of like how much debt that you owe before they might accept or approve you or allow you to enroll in their program. I say usually it's like, 20,000 in debt, so if you have like, and not to say you can't get a debt consolidation loan at like a credit union, but I would say most like debt consolidation companies, they have a minimum threshold in terms of, how much debt that they're, that you should have before they work with you. So you could check out our Patreon. We have a private tier where, I do consultations. So you could definitely connect with me that way. The link for it is actually on the main YouTube channel. So if you go to just my YouTube bio, you should be able to get the link for the Patreon. Let's see what else, man. Better your credit score, better your interest rate. Absolutely. Absolutely. Yeah, Discover does. They also offer personal loans too, and student loans. Should you buy Capital One or Discover before the acquisition? I guess so. I mean, it's not a done deal yet, but again, I mean, I don't want to give you financial advice, but I think that move would definitely increase the valuations of those companies. So, for Capital One, again, it's a consolidation move. So they're going to be saving a lot of money and adding a lot more to their, top line revenue, right? Or not really adding more, but they basically will be saving hundreds of millions of dollars that they don't have to pay out to Visa and MasterCard. So that'll just go into their own, they'll retain that. So definitely, let's see, wake up, chat school just shredded. I don't know what that means. So what's in your Patreon? So a lot of stuff that I don't really share on YouTube, just for the fact, like, after a while, you have to kind of protect the integrity of certain information, especially publicly. Because again, I don't even know, everyone who's viewing what information, how they're using it. Like what's happened a lot lately is that a lot of fraud has been going on, right? A ton of fraud. And sometimes it's a bad look, because I partner with a lot of these companies, like, have affiliate partner relationships with these companies. And then, it could be a case where, someone's trying to run off on one of these bank partners and, it just leaves a bad taste. And then people who really need that information can't get the information because then the bank or this fintech will switch up. I mean, I can give you guys countless of examples of this happening. I mean, some of you guys know, the websites will crash. They'll change the underwriting. I mean, sometimes they're changing the verbiage on the website, like right afterwards. Like I did a video on Blue Ridge Bank, right? So let me just give y'all, I mean, it's not really sauce anymore, right? But I put this out even just on the Patreon, the free Patreon, right? So this was, hold on one second. This was like one of these, so they offer one of these 0% APR cards, right? On the business. So it's so funny. As soon as I put this out there, they switched up. And mind you, this is like a small bank, right? Like, or relatively speaking. So like they have these two 0% APR business credit cards. That's the hottest thing right now, 0% APR. So they have one that's, this one's 0% for 18 months. This one's 0% for 12 months. They have sign up bonus, all that good stuff, right? So as soon as I put this just on the free tier, and mind you, we don't have that many, I think we maybe have like 1,700 people on our Patreon, but like, it just spread like wildfire. And then like they changed the verbiage. So then they start denying out-of-state applications. But before they were basically accepting, all applications. So anyways, just things that I want to just kind of protect, or maybe I'll put it out on Patreon first and then put it out on YouTube later. But yeah. We have a couple different tiers on Patreon. I also have a mentorship program as well, an affiliate marketing program as well for those who are looking to like monetize in financial services. So like I teach that. But yeah, there's some decent stuff on there. And if you want to just connect with me one-on-one. So Jason Rubin says, one of the best pieces of advice I got from you is build up as much business credit as you can and keep your personal utilization low and run everything through business cards. So that's one of the best, so the reason why I always tell people, like, look, if you're getting funded, just get once you have an established like personal profile, like maybe use one or two personal cards and then just transact on the business side. One thing I always run into with a lot of people is that they use their personal cards for business purposes and run up the utilization, and then they can't do anything else with their personal credit, right? Because they're in this catch-22. Their utilization is too high to get other personal cards or to PG for business credit cards. So it's just like, you get into this situation, but you're trying to move the debt from the personal to the business so that it's invisible. But if you just transact with the business from the get-go, you don't have to run into that dilemma. And personal cards were not really designed to get maxed out, right? Like even, for example, like I have, 820, 830 credit scores, right? If one of my personal credit card, if my utilization goes up to 10%, my score is going to take a 10, 15 point dip, right? Because personal credit is so sensitive to utilization. So yeah, I think, once you have the business credit, just stack it up. I mean, there's no limit on how much business credit you can get. And the beautiful thing about business credit is that you can hide personal utilization. Like that's one of the hacks right there. Like I can, utilize as much business credit as I want. It's not going to report on the personal profile, so I can still navigate. I can still, get other accounts. And the other thing about the business credit accounts is that, okay, yes, you're going to use an inquiry, but that new account is not going to show up on your personal. Now, what trips people up in terms of application spree is not the inquiry, it's the new account, because you can get an inquiry deleted, but it's harder to hide a new account, right? So when you have business credit accounts, the accounts are already hidden. You could just get the inquiry knocked off and then continue applying to business credit. Like it's almost, I'm not gonna say infinite, but like you don't have to, like if you're applying for business credit cards, you can just go through, let's say you have no inquiries, go on an application spree, get the inquiries removed, get more business credit cards. Like you can continue that. You can't do that with personal credit cards. Like once those new accounts start to show, that's when you have to guard, and you have to sit down for, 9 months to a year, no new accounts, let your accounts age, and then you can, start the process over. So yeah, this is definitely like one of the most important credit strategies, I think. Let's see. We all need to become a credit card name. 5 cents out of billions of people we are paid. So there are a lot of these fintech as a service types of arrangements. And I talk about this in my affiliate master class on Patreon, how anyone can basically get you don't have to be like anything special to get one of these like fintech as a service or banking as a service partnerships, where you basically can do like a co-branded card or you could leverage the resources of the financial institution and monetize off of it. I'm not going to get into that, but like, again, the credit card interchange revenue share models. We also get into balance sheet lending, warehouse credit facilities, private credit. So there's just a lot that you can do in terms of like monetizing financial services. I will tell you what I did, not for me, but you can a bit from my experience. Okay. I remember one of the older videos, the importance of building bank relations, and that can help with qualifications for their credit product. Yeah, banking relationship is everything. I mean, when you think about it, the bank's going to be more willing to lend to you if they have some type of experience with you already, versus if you just walk off the street. A lot of times when people are talking about no docs, for example, they're able to get no docs because they already have a banking relationship. So like, you're not really always going to need like a P&L or taxes if you already transact through that bank. They could see your income rolling in, they could see your deposits coming in, things like that. Or if you have like a merchant account with them. One thing I would tell you guys to do is check out, for example, if you can get into like private clients, so like Chase Private Client, Truist Private Client, which I'm gonna do a whole video on Truist Private Client. Like nobody's talking about that, but they got some real juicy credit, products within Truist Private Client. But yeah, the relationship is everything. Definitely build that relationship. Let's see. Okay, who we got? Any updates on the new FICO scoring models? So, I mean, they're out now. You go on my FICO, you can get your FICO 10, your FICO 10T. I mean, I think it takes a while before they're widely adopted. I don't think all institutions just move all at once. I mean, you have institutions that are still using the old FICO models, right? So FICO 8 is still the most widely used. I see a lot of like mortgage scores, like the FICO 5, the FICO 4. So the FICO 5 Equifax, FICO 4 TransUnion, FICO 2 Experian, FICO 8. Certain institutions do use also FICO 9, but in terms of like wide scale adoption, I've yet to come across an institution that uses FICO 10 or FICO 10T. I think they're still kind of testing it out. One thing that the lenders use, like, so when these new versions of FICO come out, they're supposed to be more fine tuned to, I guess, better assess, credit risk. And so I think what some institutions will do is like test it out to see how it's performing, if it's resulting in any sort of improvement in their loan portfolio. But again, it could be years before it actually, gets rolled out. So as far as updates, no, I don't think anything has really moved that significant. What I will say, though, even when it comes to like credit scores, right? Underwriters are even discounting credit to a certain degree. I've talked about this where now things like Pinwheel and True Data and a lot of these like instant income verification, Plaid, Finicity, like that's going to become more of a focal point because again, credit's backward looking. Your income in the last time you got paid is more recent. And it just gives a better assessment of like, okay, can you actually service the debt? Because we know FICO scores can be manipulated, right? You can add trade lines, you can get negative accounts removed. So like FICO and credit scores is not always like the only data point that's being considered. Let's see. Does getting an auto loan help build your credit? Of course. That's an installment loan. Brother, can you talk about business cards don't really work? I'm not sure what you mean by that. Can you restate the question? Let me see. What did he say? How to evade tax? No, I don't know about that. Oh man. So Audrey Truesdale, business credit is a game changer, bro. Capital One business cards report to personal though. Yeah, that's the one unfortunate. So there's three cards I know of that report to personal that are supposedly business credit cards, right? You got Capital One, you got Discover business card, and you got TD Bank business card. So yeah, those are ones that you definitely I mean, I'm not going to hate on them, but like those are definitely ones that you don't want to really focus on because if you're maxing them out, it's going to affect your DTI. No, another thing I wanted to let you guys know about. So I did a video on, some of you might know about the Carrot card, right? So this was like this so-called influencer card. They started reporting personal, which I don't understand why they did that. So it like completely ruined the card. So it only reports to Experian personal, but I mean, I like the card, like the aesthetics of it. I would use it, but now I'm not because it reports personal and, that kind of defeats the whole purpose. Yeah, business credit is definitely infinite. And that's what it's designed for, right? It's designed for business. Business has much higher capacity to spend and to generate revenue to repay that credit. So I do a lot of Baltimore City, Maryland school gym floor contracts for my business. That's what's up. I mean, I'm actually not too far from Baltimore, so that's what's up. But Baltimore has a lot of institutions, a lot of great funding programs. They have. Have you ever heard of Harbor Bank of Maryland? That's actually a Black-owned bank. Or actually, I don't know if it's a Black-owned bank, but it's actually no. I take that back. Yeah, I think it's maybe partially Black-owned, maybe not 100%. Security Plus Federal Credit Union. What is it called? Aberdeen Proven Ground FCU, which is another game changer. So, I mean, you got MECU. So there's a lot out there. But what I don't understand with business cards is why they ask for a personal guarantee if it's a business card. So here's the thing. If you're doing less than, let's say, 5 million so here's the thing. There's personal credit cards, for, personal expenditures, business credit cards, but it really should be coined small business credit cards. And then you have corporate cards, right? So corporate is going to be, let's say, publicly traded companies, large companies with hundreds of employees, companies doing millions of dollars in revenue, multiple millions of dollars, let's say 5 million and up. The threshold might vary at different institutions. I know like it's certain like Amex used to have like a startup program where you basically need to be grossing 2 million in revenue. I think their regular corporate program is 4 million and higher. Some banks it's at 5 million, right? So unless you're at that level, right, the corporate level, multiple millions in revenue for multiple years, audited financials, like at that point, you're not personally guaranteeing. Again, 99.9% of everything I talk about when it comes to business is going to be small business credit. So small business credit is still going to be predicated on the credit worthiness of the beneficial owner. So that's just a factor, the reality. Once, you become your business become a large enterprise, at that point, there's cases where you don't have to personally guarantee because it's basically the business's credit worthiness, the business's ability to repay. But most small businesses, it's like, it still depends on you to service that debt. And then when you also look at like SBA loans, for example, like they go up to like 5 million, let's say a 7A, those are also going to be personally guaranteed. But like certain types of financing above that 5 million point, it's not going to be personal guarantee. Oh, whoops. So it says, is there a way to trade in your vehicle every 6 months? Yeah, I mean, I don't see why, but I'm not sure what the advantage of that is. I have a business credit. I have a business credit. Oh, I think you meant capital on tap, but you got to pay back more. Yeah. So capital on tap, I think it's they give you a pay in full option, or you could pay 10% of whatever your statement balance is. Do you know how much capital you need to create your own bank? That's not a whole life insurance policy. I remember Kanye said 50 to 75 million in an interview. Yeah, definitely. To buy a bank, you're going to need a lot of capital. But you could probably raise the capital, like again, maybe through like a private placement. But yeah, 50 million sounds about right. I mean, that's not a small order to buy a bank. You definitely need to have a strategy. I have 2 derogatory marks on my credit. I'm interested in starting a business. How should I proceed with personal credit report and business development? Now, I think those are 2 separate parallel tracks. I don't necessarily think that your credit necessarily has to be perfect before you start your business. In fact, you should be doing both of those simultaneously. So I don't think it's one before the other. I think it's both at the same time. Because eventually, like once your credit is fixed, hopefully your business is further along to the point where things start to line up, and you could maybe access credit through your business. But yeah, I don't think I don't think it's something that one is contingent on the other. They definitely are important together, but you don't have to necessarily wait around for your personal credit to be fixed before you start a business. I would actually do both at the same time. All right, he says, who's making 4 million? I mean, believe it or not, like, there's a good amount of businesses out here that are generating, millions of dollars. I've actually had not a lot, but like, I would say probably at least like, maybe like 6 or 7 companies that have actually found me through YouTube where their businesses were generating, multiple millions. I'm talking about 7, 8 million. I actually had a consultation with a guy who was looking for funding. His business was doing about, I think he did 7 million in gross. He had like an IT service business. And yeah, he had to basically hire, I think he said he had to hire like 25 people or something like that, and needed, a large amount of funding just to sort of bridge the gap between like, getting his invoices paid out and then being able to meet payroll. But those are few and far between. I'm not gonna say the vast majority of funding leads I come across are not doing 5 million, 7, $8 million a year. Those are definitely rare. Is Capital One the same as Credit One? No. As a matter of fact, I think Credit One hijacked some of their marketing because their logos look almost kind of similar. If you don't look closely, you might think it's the same. But no, Credit One and Capital One is not the same. And I'm honestly not a big fan of either of those banks, to be honest with you. Neither one are really that ideal. How many credit inquiries is considered too many? So the thing with inquiries is inquiries are going to be much more detrimental when you have a thinner profile. I took a screenshot. I wish I could show it to you guys. Someone posted on my FICO, they had just gotten approved for a bunch of cards. And I think they had like 40 inquiries on one bureau, and they had like 113 accounts on their credit profile. And, they obviously are still getting approved. My rule of thumb is that, 3 inquiries within 6 months on for each of the bureaus. So if you have, let's say, an experience on your Experian, you have 3 inquiries within the last 3 months. Usually you're kind of pushing it if you apply for anything in excess of those 3 inquiries within 6 months. Have I always, stayed true to that rule of thumb? Not always. I've gotten approved with, 10 inquiries on my credit report, but I would say 3 and 6 months is probably where it's probably the sweet spot. Let me see. You're welcome, Jasmine. All right, so we have this little last comment right here, and I think we'll wrap up. So he says, your expertise is greatly appreciated. Wanted to make sure you know this. I would definitely be contacting you for your services. Absolutely. Go check out Patreon. So we're about over 3 hours in. Definitely wasn't expecting to be on this long, but I know it's getting late. So we're going to wrap this up. And I appreciate this. Just getting a chance to connect with some of you. Again, you could check out the Patreon if you want to schedule a consultation, ask me any specific questions, or if you want a credit review. I do credit audits, look at your credit and be able to help sort of guide you to whatever your goals are when it comes to credit. But anyways, I've enjoyed this. I think that's the end of the comment section right there. We got all caught up. So that's all I really wanted to share in this video or this live stream. So you guys have a good night and we'll talk to you soon. Peace.